Alright, and good afternoon everyone. Happy Sunday, and we are back. For people unfortunately who haven't seen the great results yesterday, it's going to be just the next attempt where you get your great results. For others who are giving this the first time, this is the tax fast track course, and we will make sure that we get really good marks. We will learn from people's mistakes, we will get better from their experiences, and we will get better today. Today's session is going to be an excellent session on GST. So what's in store? Let me tell you what's in store in GST. First up, the chapters for this session that we're going to look at. We've just finished time of supply, so we're going to look at a chapter called registration. I just want to update a small thing which we lost out in time of supply. I want to update that. And we are going to look at a chapter which is called ITC. Is that the updated QuickBook? That is the link for everything, including the QuickBook. Guys, I'm not getting the time to update and upload. So don't worry, be with me. Finish the course with me a couple of days. And when I get the time, I'll update the QuickBook there. Till then, that QuickBook can be used, no problem with that. Alright, so that is registration and ITC, which is on the cards today. And of course, like every day, we will squeeze in some exemptions as well. So that's the thing that we are going to do today. Let's start off only with an exemption so we don't have to squeeze it in. So guys, let's start off with one exemption and then we'll come back to registration chapter and then ITC chapter. The thing that I want to squeeze in right now is, just one second. Perfect. The thing I want to squeeze in right now is an exemption called healthcare services. Guys, this is healthcare services. The next 5-10 minutes, we're going to focus on this healthcare services. It's going to be a great exemption. Watch out for it. Guys, healthcare services, whenever you're not well and you go to a doctor, obviously it's expensive and the government doesn't want to make it even more expensive, and hence the government says that we are giving exemptions to healthcare services. What kind of healthcare services? On the screen. Whenever you're not well, you go to a CAP. What is CAP? A clinical establishment, an authorized medical practitioner, and a paramedic. Clinical establishment means hospital, nursing homes, etc. Authorized medical practitioners are doctors and paramedics are nurses, etc. When you go to them and they give you services in the nature of Hunase. These are all shortcuts which are already there in the QuickBook, don't worry. Hunase is the shortcut. What is Hunase? Homeopathy, Unani, Naturopathy, Ayurveda, Siddha, Allopathy and Yoga. When they give you services in the nature of Hunase, what is CAP? Welcome everyone, whoever has joined, Akshay, Namita, Asma, Abhinandan, Rohit and others, whoever has joined. Guys, this one is healthcare services. We are starting off with one exemption, registration chapter and exemption chapter in today's session. So Hunase is basically the approved medical services which are basically exempt. So any services healthcare in the nature of Hunase are exempt, and this is you are getting these services. So Hunase services are exempt. Yes. What else is exempt? Guys, any diagnostic services whereby your blood test, your x-ray, etc. are also exempt. Next, ambulance services to go and to come back are also exempt. Yes guys, ambulance services are always exempt. Next, when unfortunately you are admitted to a hospital, there is hospital services plus food and plus stay, but all these there is a principal supply which is hospital services, healthcare services, and they are naturally bundled, and hence the entire thing will be exempt. So what is taxable in case of healthcare services? Let me put the taxable also part here. Guys, the food when they provide it to inpatients are those people who are already admitted, that is exempt. But when the food is provided to outpatients, etc., or when the food is provided to visitors, that is taxable. Plus any renting, any advertisement services, all that is also taxable. Just like you are kept happy with these services, even your vet and even your pet, healthcare services for your pet are also exempt. Next, any stem cell therapy. What is stem cell therapy? Stem cell therapy is a therapy to heal you when you are ill. We won't get into the science of it, but who provides the stem cell therapy? Cord blood banks. When cord blood banks provide stem cell therapy, that is also exempt. Vet pet is also exempt. Next, guys, when the government provides rehabilitation services, so this is for the government rehab. Yes, when the government provides rehab services, that is also exempt. But Invert services are not exempt. Example, if a hospital puts an air conditioner, will they pay GST on that? Yes, guys. A hospital, when they put an air conditioner, will they pay GST? Yes. Guys, tell me if you understand this. These services are exempt. So does the government get any GST from any Hunase services? Does the government get any GST? No, they are exempt. So the government doesn't get any GST. So will the government give you credit of the GST you paid on the AC? No, you don't even get the credit, because if it's a give and take relationship, if you don't give GST to the government will not give you credit. But there are two things. On inputs there is no GST on two things. What are the two things? One is when doctors provide services to CAP. Example, there's a surgeon who comes and visits the CAP. So when doctors provide services, for the doctor it's outward services, so there is no GST, and for the CAP this is inward services, so again no GST. And when there is biomedical waste treatment, guys, you know hospitals provide produce a lot of waste. So when there is biomedical waste treatment facility given, of course it will be charged to the hospital, but it will be exempt. So these two input services are exempt. So doctors input services and biomedical waste treatment, this input service is exempt. Guys, this is healthcare services. Just recapping, healthcare should be exempt, but only in the nature of Hunase. Only if it's given by CAP. Input services, two of them are exempt. Food out to outpatients, advertisement, renting, etc. is taxable. These are exempt. Diagnostic, ambulances, composite supply, also stem cell therapy and rehab services, and vet and pet, these services are all exempt. It could be a really good question. Good afternoon everyone. It could be a really good question in the exam as well. Alright, so we're done with one exemption as discussed. So we are done with one exemption. We will do more, but right now we're done with one exemption. Right now we are entering into a fabulous, amazing world of registration. Everyone revise with me. I'm going to upload the quick book here at this juncture so that we can revise registration chapter. Here we go. This is IDT and this is the quick book. Perfect. I'm just going to go to the registration chapter. Here we go. Guys, this is the registration chapter, but before we start the registration chapter, let's quickly see what are the sections of registration chapter. Good, Nikita, you know all the shortcuts. I'm really happy. Nikita, after your exams, if you want to intern with me, I'm preparing some notes, and if you want to help me, I'm more than happy to give you a paid internship. So it's my first class. Can I continue? Definitely, Rohit. Guys, anyone else also wants to continue, there is no problem with it. Please join in and please continue. Guys, registration chapter has a couple of sections. Let's quickly revise what are the different sections in registration chapter. In registration, sometimes you have to compulsory register, which is section 24. Guys, in case of compulsory registration, you don't even have to see the turnover. No turnover, simple. The most common compulsory registration is interstate supply. So if you supply from one state to the other state goods, you need to compulsory register. Whereas some people need to register only when they cross the threshold. So this is threshold based registration, yes. And there are some people who don't have to register. The government hears them, so they don't have to register. They are section 23. So these three sections talk about registration. When you know you want to register, there is section 25, which tells you the process of registration. How do you register? There is a hotline number called 777. All these are shortcuts. So you'll know the procedure for registration here. What is the effective date? When do you need to register? Do you need to register in every state? What do you need? PAN, etc. is given in section 25. 26 is a section which says that in GST, all the GSTs are together. C, S, I, all of them are together. We'll see. In 27, this is a section only for casual taxable person, non-resident taxable person. We'll see a Delhi exhibition and we'll see how they are supposed to register. 28th section talks about modification to the registration. Guys, it's only human to make changes. So if you have any change in your address, etc., how do you make that change? 29 is very, very important. Can your registration get cancelled, or can you cancel the registration? And 30 is revocation of cancellation. So if your registration gets cancelled, can you revoke it? That is section 30, and this is your chapter. Guys, the first thing you will check in registration is compulsory registration. The following people need to be compulsory registered. Guys, please tell me, if it's compulsory registration, will you have to check turnover? In case of compulsory registration, will you check turnover? No. So always in the exam, check this first. I have a shortcut for the following people. The following people need to be compulsory registered. Here it is, guys. Who needs to be compulsory registered? Ensure compulsory registration is needed TONAI. This is the shortcut for compulsory registration. All these people need to be compulsory registered. Section 24. Ensure is e-commerce operators. Like Flipkart, like Amazon, etc. E-commerce operators need to be compulsory registered. And if you are supplying your goods or services on e-commerce operators, then for you also, so e-commerce operators and sellers on e-commerce operators both need to be compulsory registered. Next, casual taxable person needs to be compulsory registered, and here is non-resident taxable persons also need to be compulsory registered. Who are these people? Casual taxable person is someone who has a place of registration in India, let's say electric bike company which is registered in Maharashtra, but they temporarily want to make supplies from another state, and they are called casual taxable. The Delhi exhibition which is lasting for 27 days. And non-resident taxable person is like Tesla, who comes to India after 5 years, and in that case also compulsory registration is there. Just one second, guys. In that case also there is compulsory registration. NRTP also requires compulsory registration. Next, R. If you're someone who has to pay tax under RCM, example, if you're the recipient and in RCM you have to pay the GST, so then you are compulsory supposed to register, because if you're not registered, how will you pay GST to the government? Next, I, which is very, very important, interstate supplier. But there are two exceptions to this. We'll see the exceptions. But interstate supplier, if you are making supplies from Maharashtra to Gujarat, your electric bike company making supplies from Maharashtra to Gujarat, then you need to be compulsory registered. And TONAI, what is TONAI? There are some terms here which will be at CA final only, like TDS, TCS persons. Guys, who are TDS, TCS persons? You don't need to know, because this entire concept is only for CA final. But if there are TDS, TCS persons, they need to take compulsory registration. Yes, that is TONAI T. O is OIDAR. Guys, OIDAR is also something of CA final only, but I'll just tell you the full form and I'll give you an example. Online Information Database Access and Retrieval Service Provider, which is basically nothing like but Google, where they give you online information, they give you database access and retrieval services. That is Google. They have to be compulsory registered. N, notified people have to be compulsory registered. Very, very important. A, if you are an agent, guys, you know who's an agent in GST. In GST, an agent is someone who issues his own invoice. So if you are an agent of a taxable person, then you need to be compulsory registered. Example, guys, I'm giving you an example. You tell me, you are an agent of electric bike company which is registered. Do you need to be registered? Yes. You are an agent of a petrol pump. Do you need to be registered? No. You are an agent of a natural gas supplier. Do you need to register? No. So only if your principal is registered. But what if your principal is not registered? Then you will be based on threshold based registration. Alright. And next is I. I is input service distributor. Again, guys, these three terms are only for CA final. This one, and this one. Input service distributors are people, I'm just telling you in a nutshell because it's for CA final, are those people who cannot take credit. Why? Because they don't have any outward supply. So the government allows them to distribute their input service credit. So that is called input service distributor. Guys, these three terms you don't need to know except the short form, full form. That's all. Nothing else at CA interlevel. So ensure compulsory registration is needed. TONAI is the shortcut for compulsory registration. Once you are supposed to be compulsory registered, you don't have to check the turnover. You have to immediately go and register yourself. But guys, not everyone is here. My CA firm is not here. My CA firm is not an e-commerce operator. We are not a casual or non-resident taxable person. We don't pay RCM. We are not interstate suppliers. We are not TDS. We are not OIDR. We are not notified. We are not an agent. We are not ISD. So then when is my CA firm supposed to be registered? For that, we have to go to threshold based registration. That is section 22, and in section 22 I have a really nice shortcut so that you don't have to by heart all the different state limits. Section 22, you have to check aggregate turnover. Guys, you know what is aggregate turnover. Aggregate turnover means if there is electric bike company Maharashtra, Gujarat and Tripura, all three, one PAN, one turnover. Aggregate turnover means whatever you supplied outside, exempt supply, taxable, non-taxable, export, whatever you're supplying outside except three things: IIG, no interest, no inward supply, and no GST to be included in aggregate turnover. So you have to basically calculate your aggregate turnover. We'll do some amazing sums on this, don't worry. Once you calculate your aggregate turnover, you have to check step 1. Step 1, there is a limit of 40 lakhs if you satisfy the condition of pigs. So there is a 40 lakh limit if you satisfy the condition of pigs. Let's see what is this pigs. You should not be dealing in prohibited goods. Ice cream, pan masala, aerated water, tobacco. You should not be trading, you should not be manufacturing, nothing. In composition scheme, you could trade in it, but here you can't even trade, you can't even manufacture. You should not be doing interstate supply only within the state. Yes, only within the state. So if Maharashtra is supplying only within Maharashtra, electric bike company Gujarat should supply only within Gujarat. Yes. You should be only supplying goods, no services. Services don't get 40 lakhs. And last, you should not be in some states. Which states? Here is a shortcut. You should not be in the states of NT-MAMI. What is NT-MAMI? Nagaland, Tripura, Manipur and Mizoram. You should not be in these states. What do I repeat, guys? Which states you should not be? NT-MAMI, Nagaland, Tripura, Manipur, Mizoram. You should not be. Further, you should also not be in the following states of PUT-SAM. What is PUT-SAM? Here is PUT-SAM: Puducherry, Uttarakhand, Telangana. Puducherry, Uttarakhand, Telangana. Puducherry down south, Uttarakhand up north, Telangana down south, and SAM is in the northeast: Sikkim, Arunachal Pradesh, Meghalaya. So you should not be in NT-MAMI, you should not be in PUT-SAM. These are the states you should not be in. And if that is the case, all 4 conditions are met, then your limit is 40 lakh. That means up to 40 lakh you don't have to register. That is step 1. Step 2 is if you are in NT-MAMI. If you are in NT-MAMI, that means if you are in Nagaland, Tripura, Manipur or Mizoram, then your limit is 10 lakhs. So first step is 40 lakh. The shortcut is pigs. Let me repeat, guys. What is pigs? You should not be dealing in prohibited goods. You should not be doing interstate supply. You should only be doing goods, and you should not be in some states. Which states you should not be in? NT-MAMI, Nagaland, Tripura, Manipur, Mizoram. And PUT-SAM, Puducherry down south, Uttarakhand up north, Telangana down south. And SAM is in northeast: Sikkim, Arunachal Pradesh, Meghalaya. You should not be in these states. If that is fulfilled, all 4 conditions, 40 lakhs. Else, guys, step 2, NT-MAMI, how many lakhs? Only 10 lakhs limit. And step 3 is the default. If this is step 1 is not fulfilled, step 2 is not fulfilled, then the default limit is 20 lakhs. Guys, this is how you will find very easily. We'll check our knowledge through some ICAI module questions. This is how you will get your limit. Up to this limit, you don't have to worry. Above this limit, you have to register. 1 PAN, 1 turnover. Remember, as an agent, whatever supply I am making independently plus whatever supplies I am making for my principal, both have to be included. NT-MAMI have 10 lakhs limit, others have 20 lakh limit, and if you are fulfilling pigs, then you have 40 lakh limit. That, guys, is section 22. Don't worry. If you are even remotely understanding this shortcut, when we apply it to the sums, you will love it. Guys, this is a shortcut that will help you not have to remember each state's limits. Next, once you are supposed to register, so let's say electric bike company has one setup in Maharashtra, one setup in Gujarat, and one setup in Tripura. Then what is the limit? The limit will be Tripura's limit, that is 10 lakh, because one of the entities is in Tripura. So the limit will be 10 lakhs. And if you cross the limit, can you have to register in all the states? Yes. GST, once you are registered, 1 PAN, 1 turnover, 1 scheme. Once you are registered, you have to be registered in all the 3 places, unless one of the places is like a petrol pump, which is non-taxable. Alright. Guys, here in case your registration gets transferred, so if electric bike company gets sold to Hero Honda Motors, then in that case Hero Honda Motors will have to take a registration. They cannot continue with the same registration. They will have to take their own registration unless they don't have one. And this will be from the date of transfer. And in case of amalgamation, etc., on the date of incorporation. Not very important. In this section 22, the limit is the most important thing, whether you're supposed to register or not. Guys, that is section 22. Wait for the questions. You will love the questions, and some exam questions also we will solve here. This is section 22. This is section 24. So either 24 or 22, one of them will give you an answer whether you should register or not. These are the two sections for registration. But then guys, there were some people who said that, listen, we don't want to register, we should not want to register, or we should not have to register. So the government hears them. The shortcut for section 23 is HEARS. HEARS. These are 5 people who don't want to be registered. So the government says, okay, we will not make you register. Let's check who these HEARS are, how the government hears them. First is agriculturist. Guys, agriculturist means not a company, but only an individual or an HUF can be agriculturist, like a farmer. And when they are supplying goods, they are not subject to tax. We'll see an exemption on agriculture. They are not subject to tax. And hence the government says you are okay. If you're doing agriculture, you don't need to register. Next, E is exempt supply. Guys, you know what is exempt supply? Exempt has 3 N's. Nil. Nil is also exempt. Non-taxable supply is also exempt supply, and exempt through notifications. All those, if you are only doing that supply, then again you don't need to register, guys, because you don't have to charge GST. So why do you have to register? Next is R. If your entire supply is taxable but under RCM, then why are you worried? The recipient will bear the burden and the headache. So if your entire supply is taxable but under RCM, then you don't need to register. So these are 3 people, E, A, R, and now H and S. Very, very careful, guys. If you're a service provider, like my CA firm, if you're a service provider and you are doing interstate sale, that means from Maharashtra, my firm is doing services in Gujarat, then in that case, interstate is compulsory, I told you. But there are 2 exceptions. One of them is this, that if you're doing interstate supply of services, then up to 20 lakhs, you don't need to register. So if my CA firm, guys, gives services to other states, interstate, it is compulsory registration, but there are 2 exceptions, that in case of service provider up to 20 lakh, there is no registration up to 20 lakhs. And what is H? H means handicraft goods. Guys, handicraft goods are those that are made by hand, not by machines. A little bit machine is okay, but primarily made by hand. Those are handicraft goods. And if you are supplying handicraft goods, even interstate, that means you are supplying handicraft goods from Maharashtra across India, then the government says interstate is compulsory registration. But the second exception is handicraft goods. Even for handicraft goods, the government says we like you, and hence up to 20 lakhs you don't have to register. And if you are selling these handicraft goods in an exhibition, example like a casual taxable person, then also up to 20 lakhs you don't have to register. So handicraft people, guys, very important. Handicraft people, when they sell within the state, obviously the limit is 40 lakh. When they sell to other states, also interstate, they don't have to compulsory register up to 20 lakhs, and a casual taxable person also, they don't need to register up to 20 lakhs. This limit is all aggregate. So who are the people who don't have to register? This section 23, and the shortcut is HEARS. Guys, without looking, can you tell me HEARS? What does A stand for? Please tell me, guys, without looking at the screen. What does A stand for? Agriculturist. What does E stand for if you are making exempt supply? What does R stand for if you are making supplies which are taxable but under RCM? Why are you worried? What is S? Services interstate up to what limit? 20 limit, 20 lakh. Not intra-Nandesh, service interstate also. And handicraft also interstate or even casual taxable person up to 20 lakhs. Good, perfect guys. One more section down guys, that is section 23. Guys, my honest attempt to these shortcuts is so that you don't have to by heart and it's easier to remember, also easier to revise. Alright, we have some really good questions waiting for us, including exam questions, etc. But we'll do them. First, my agenda is to finish the concept with module questions. Once we're done with those, then we will look exam questions, MCQ booklet, whatever we can try. Perfect. So these three sections are done, which tell you how to register. 23, 22 and 24 tell you how to register. 23 tells you how not to register. Then now we are moving ahead to section 25. 25 is one of the most interesting sections, but it's theoretical. 25 section says that if you need to apply for registration, you need to apply within 30 days from becoming liable to register. That means if you're liable to register on 1st of March and if you apply on the 10th of March, this is date of application, this is date of becoming liable, then you have done your good job of applying within 30 days. And then whenever you get the registration, let's say 25th March is your registration date, then congratulations, your effective date will be 1st of March. But what is the difference? Why should I be congratulated if I get an earlier effective date? That means if you buy anything from 1st of March onwards, you will get ITC. Also, that means whatever supplies you made during this time, you should charge GST. But I did not have my GST number in this while. I got it only on 25th March. No problem. You can go back and revise the invoices, which we will see in invoice chapter. So again, I repeat, you need to apply within 30 days. If you apply within 30 days, congratulations, you will get an earlier effective date. So that means you can take earlier ITC also, but that also means you need to issue revised invoices. But what if I'm not liable to register, guys? I'm just voluntary registering. Can I voluntarily register? Yes, guys, you can voluntarily register. But once you're voluntarily registered, then you need to charge GST. And once you're voluntarily registered, you can also take ITC. So can we voluntarily register in GST? Yes, you can. But let's say I'm supposed to be voluntarily registering on 1st of March, I apply. And I get my registration on 25th March. In this case, what will be my effective date? My effective date will be 25th March. Only from 5th March will I be able to take ITC. Good job, people are applying. In GST, we require state-wise registration, guys. Every state different registration. In the same state also, if you want, it's optional. If you want, you can take separate registration. So if there is electric bike company Maharashtra, and that there are in Maharashtra there is Mumbai also and Pune also, you can be under the same or you can take different registration. But if in the same state, if you take different registration, then each place has to be a different registration. If in Maharashtra I have 3 places, then all the 3 either have to be together or either have to be individual. Guys, SEZs need to have separate registration. Think about SEZ as a separate state. So hence, even in the same state, if you have an SEZ and you have an entity there, it has separate registration. Casual taxable non-resident, we will see in section 27. You can also take voluntary registration. Guys, deemed distinct persons, which we already know, under the same PAN, can we take ITC from 10th? You can take ITC from the 1st. Nandesh, because you are registered, effective date is 1st of March. Alright. Guys, deemed distinct persons are already, we've understood, under the same PAN, if there are many entities in different states and all of them are registered, they are deemed distinct person. Guys, PAN is mandatory for GST registration. It's the backbone of GST registration, but only one person is not required a PAN, that is an RTP. He's coming from abroad, how does he have a PAN? He will not have a PAN. So what will he need? He will need his passport details of the person who's coming and anyone's representative's PAN details. Very important. Can the officer also register you? Yes, guys. If the officer feels you need registration and you're not registering, he can also offer you, he can also give you registration. If you agree with it, confirm it. If you don't agree with it, you can appeal against it. And guys, there are 11 embassies, UN offices, consulates and embassies in India. You will see in exemptions, today's exemption is healthcare services. One second. You will see, just one second. Hello? Yes? Yes, Pranamya, tell me. Okay. Oh. So Pranamya, can we do one thing? I'm actually in a lecture right now, which gets over. There's a break at around 5:30. So let me get back to you then. Is that okay? Yeah. All right. Yeah. Okay. So guys, if there are UN, consulates, embassies, etc., when they supply services, there is no GST. It's an exemption. We'll see today an exemption. But when the UN, etc., they buy an AC, do they have to pay GST on that AC? Yes, they will have to pay GST. So how will they take credit? So for them, because they are very important people, the government had said that you can take a unique identity number. It's not a registration, but it's just a number you take, and that number will help you get a refund of this GST that you've paid. So unique identity number is only for UN, embassies, consulates, etc. How many embassies, consulate in India? 11. That's a shortcut ahead in returns chapter. Guys, Aadhaar has now become compulsory from the 1st of April 2020. That means you also need to update your Aadhaar. If you don't update your Aadhaar details, then they will take a longer time to register, which we will see ahead. You need to apply for registration in GST REG01. This is the form that you need to apply. Only few forms are important. This one is important. You need to apply GST REG01. And the bank details you don't need to submit immediately, guys. Sometimes it takes some while to open a bank account. So bank details you can update within 45 days also after you get registration. For registration, the shortcut is dial 777. What I mean is, guys, you have to apply. Let's say you apply on the 1st of March. Then the officer gets 7 days to respond to you. If he doesn't respond to you, that's his mistake. So it's deemed acceptance. So you get registered. If he responds to you, let's say on the 5th of March, then you get 7 days to respond back to him. And if you don't respond back, it's your mistake. It will be a deemed cancellation. And now if you respond, let's say on the 10th of March, you respond, the officer again has 7 days to either accept or reject it. He can't again now send more queries. Only once he can send queries, which is already done. So now it is his time for 7 days. So his time 7 days, his time 7 days. If he does nothing in these 7 days, then it's not your mistake, deemed acceptance. So hence 777 is the hotline number, 777. But guys, if you don't update the Aadhaar details when you submit, if you don't update the Aadhaar details, this first duration will be 30 days. Because they need to verify you better, they will take 30 days. So hence Aadhaar is important. If you don't update the Aadhaar, then the period of registration slightly becomes longer. Guys, physical verification of your office, etc. is not compulsory. They may come to your office to check, they might not. In my example, they had not come to check my office. An effective date you have already seen is the earlier date if you apply on time. If you don't apply on time, or if you're applying voluntarily, then the date you register or the date you get your registration is the effective date. Guys, all this is in section 25. GST number is a 15-digit code. You don't need to know the details. Suo motu registration can be converted into full-time registration by the taxable person. You can accept the suo motu registration. UIN is only for refunds. And yes, guys, in your registration certificate, you need to mention your principal place of business, which can only be one place. And you can mention many additional places of business in the same state. Physical verification may be done in certain cases, not compulsory. And you need to display your registration certificate very prominently, guys. Every time you go to a shop, you will see outside the shop there is a registration number, and inside somewhere they will have framed it. You need to frame your GST number and put it on a board at a prominent place. That is section 25. Mainly questions can be on effective date. Mainly questions can be on effective date in this section. Alright. That is section 25. It just tells you what is the process of registration. Next, guys, is section 26, which is a very simple section. I call it the Hum Saath Saath Hai or Together Forever section. In section 26, they say when you register under IGST, you don't need to make other registration in every act. You will automatically register in all the other GST acts. And if you are removed or cancelled from one registration, you are automatically removed from all. So that is called deemed registration. That is section 26. 27 is absolutely important. 27, guys, think about it. In Delhi, there is an exhibition happening for 27 days. there is an exhibition happening for 27 days in Delhi. And who is going to that exhibition? Electric bike company is going, yes, to Delhi in that exhibition. And a non-resident taxable person like Tesla is also going to that exhibition. So this is that exhibition which is happening in Delhi. In that exhibition, when they go and they sell, there will be CGST and there will be SGST, which is Delhi state. But Delhi says, what if you guys run away? And hence, as a casual taxable person and as a non-resident taxable person, you need to be compulsory registered. That we've already seen in compulsory registration. You need to be compulsory registered, but you need to be registered 5 days, at least 5 days in advance. Guys, generally you have 30 days after you're liable to register. Here you have to register at least 5 days before. And so that you don't run away, you have to pay advance GST. Yes, you need to pay. You need to estimate how many bikes or cars you're going to sell, and you have to pay advance GST. What if you pay extra? Don't worry, you can always take a refund after filing your return. And here, very important, the exhibition is for 27 days. So how long will your registration be valid for? 27 days. Example, guys, this is just an example. But what if it's 270-day exhibition? Sorry, then it is maximum 90 days. That means the days you applied for, or maximum 90 days, that is the period of registration. And can you extend that period? Yes, you can extend that period by another number of days, or maximum 90 days. So basically the first time 90 days and the second time again maximum. That is the maximum, guys. It's not automatically 90. The number of days you apply for, or maximum 90. Same thing with the extension also. And you know, guys, NRTP will not have a PAN. So they have to give their passport details and any representative's PAN. This is section 27. Next, very interesting, not very important, is section 28. Guys, it is only human to make changes in your mobile phone number, in your address, in your name, in your constitution. If you make some changes, can you modify your GST registration? Yes, you can modify, and a new registration certificate will be given to you. So a new frame will be put up in your office. Section 28 says, can you amend your registration? Yes, but there are two kinds of amendments. One requires approval, where the officer doesn't trust you and they require approval. This is called CAN. The shortcut is CAN. What is CAN? Any change in your constitution, like admission of a partner, retirement of a partner, etc. Any change in the address and any change in the name. These three things, guys, you need to actually intimate the officer. Officer will check and then he will accept it. This is basically, the hotline number is 15-15-7. That means once a change has happened, like your address has changed, within 15 days you will apply. Then the officer gets 15 days to come back to queries, and you have 7 days to reply back to him. So this is 7 days. Days are not important here, but just remember, for CAN you need approval. And for the others, you don't need approval. You can just go online, make the necessary changes, and you'll get a fresh registration certificate. You have to just take a print and put it up wherever you want to put it up. But mobile number and email address, if you want to change, then you will have to do an OTP verification for the mobile number and email address that you want to change. Also, guys, you can't change your PAN number, because PAN number is your backbone of the GST registration. So if your PAN number changes, your entire GST registration changes. So if your PAN number changes, you need to get a new GST registration. That is section 28. That is also done. Very important is the next one. That is 29. Guys, 29 talks about cancellation, and which is very sad, because if your registration gets cancelled, guys, the credit that you've taken in your credit account, electronic credit account, or what we call as a Paytm account, all that credit will disappear. It's almost like someone telling you at CA final that, listen, your CA registration is cancelled. What about all the exams you gave? All of them disappear. Same way, this is called cancellation. In cancellation, there are two kinds of cancellation. One is you cancel it on your own. This is suo motu cancellation. Can you do suo motu cancellation? Yes, of course you can. You only applied for registration. Why can't you cancel it? You can definitely apply. Why will you do suo motu? The business is shutting down. The business is being sold. The owner is no more. There can be many reasons when you cancel a registration. How do? You go online and you make an application for cancellation. When you apply, you need to tell them the date you want to cancel. Let's say today you apply 27th Feb and you say that I want the cancellation done from 15th March. The officer will then go through your cancellation. You will have to pay your liabilities, guys. You cannot run away from it. Just like if you're vacating a house which is on rent, you have to pay the last month's rent. So you have to pay your liabilities, and then while he's checking your cancellation application, your registration will be suspended. Suspended means during that period you cannot make any taxable supplies. But the good part is you don't even have to file your return during the suspension period. And finally he will send you an order that listen, your GST registration is cancelled. Let's say the order comes to you on 5th March and it says that your GST registration is cancelled from 15th March. Once the order comes, you need to file a final return, which we will see in returns chapter. This is the easy registration, guys, not a big deal. But the more important one is cancellation by the GST officer. The GST officer, if he feels that there are reasons to believe, then he can cancel your GST registration. There is a shortcut for this. Till 15th we have to pay to the government. Nandish, till 15th, yes, you've asked to 15th, so till 15th, whatever is your liability. But what happens is when you apply that you want your cancellation from 15th, they will suspend your registration. Let's say they suspended today only, 27th, then 27th to 15th, you can't make any taxable supplies. Alright. Guys, if the GST officer feels that this is a shortcut, very important, you can immediately commence 36 frauds. Immediately commence 36 frauds. This one we will discuss ahead, but right now, if he feels you can immediately commence 36 frauds, what is this? This C is if he feels you've contravened any provision of the GST Act. Contravened means violated. If you have, what is this? I means invoice. If you have issued invoices, but you're not making supplies, that means you have issued invoice for sale of mobile phones, but you have not sold the mobile phones, then there is some problem. They can cancel your registration. If you've not commenced your business for 6 months after you've taken registration, why did you take registration? They can cancel it. If you don't file your returns for 6 months and for composition scheme people for 3 periods, then we will cancel your registration. And if you've got the registration through some fraud or misrepresentation or misstatement, then we can cancel your registration. So can immediately commence 36 frauds. So can immediately commence 36 frauds. These are the reasons. This could be a good question, and this has been a question in your exam. What are the reasons where the GST officer can cancel your registration? Guys, there are 3 more reasons. Miss 99 ITC, but we will do that when we do the chapter called ITC. Alright guys, when your GST officer cancels your registration, he cannot surprise you that listen, surprise, your registration is cancelled. No, he will give you an opportunity of being heard. He'll give you a show cause notice. Only if you don't argue against it validly, then he will cancel it, because cancellation is very dangerous, guys. All your credit will disappear, and hence cancellation is done very selectively and after giving due notice, etc. Again, here also he can suspend your registration till he is investigating you, and in the suspension you don't have to make any taxable supplies, you can't make, and you don't have to file your returns also. Unfortunately guys, you did not file your returns and your GST registration got cancelled, but you don't like that. So section 30 says that don't worry, if your GST registration has got cancelled for some reason, don't worry, you can always revoke your cancellation. That means undo that cancellation. But how do you need to do? You need to apply to the officer. He will not read your mind that you are feeling bad. You need to apply to the officer with your hands folded that, sir, please, you cancelled my registration. Can you revoke it back? Can you revive it back? But if you yourself have cancelled registration, there is no revocation, guys. Then you are playing with the GST officer. So if you applied for cancellation, there is no revocation. But if the officer has cancelled, you can revoke it. You can ask for revocation, yes. You can make an application within 30 days. But guys, something has changed in this. Earlier, you could apply in 30 days. But if you forget or you miss out this due date, they could extend it by 30 days and by another 30 days. This was earlier. Now, as per a recent notification which applies to your exam, I've already released a small update for you guys on my YouTube channel. Guys, all of y'all who are watching this should also look me up on YouTube and follow that YouTube channel, because I keep updating stuff there. So you now have 30 days to apply, but if you miss out on the 30 days, then what is the due date now? Now the officer will decide how many days to grant you extension. It's not automatically 30/30, the officer will decide. And again, when you are trying to revoke your cancellation, whatever was done wrong, example, if you have not filed your return, that has to be done right before you file, before you revoke. It's like a breakup, it's like a fight with a friend. If you're going to get back to your friend, you will not do what you did earlier, by which your friend was angry. Perfect. And if you can't file your return because your registration is cancelled, they'll revive the registration, but you need to file your returns within 30 days. Guys, this is a chapter on registration. Very, very interesting chapter. Now what we will do is, we will go to the registration module and we'll look at questions from the module. Everyone, we need to do this. So I'm looking at the module registration chapter. Here we go. Perfect. Here it is, questions from the registration chapter. Guys, active participation, and this is important. Determine the effective date of registration in the following cases. Over to you all, guys. Please see the first one and answer what is the effective date. Guys, the threshold limit crossed on 1st September. You applied within 30 days. So hence you get 1st September as your effective date. Congratulations. So Nandish, from when can you take ITC? Specifically for you, when can you take ITC? You can start taking from 1st September. Perfect. Guys, over to you all. The second one, please do the second one. You crossed on 25th October, but you applied after 30 days. So sorry, you will get a late effective date, 5th December. Good job, guys. This is with section, guys. This is section 25. All right. Please read the second question and please state the exception to this question. Guys, do you need a PAN number compulsory? Yes, you need. The only exception is NRTP. Perfect. Excellent, Akshay. Guys, the third one, state which of the following suppliers are liable to be registered. Guys, first check for 24 compulsory registration, only then check for 22. Over to you all, the first one. Yes, the agent, guys, is he an agent of a taxable person? Yes, so compulsory registration. Over to the next one, the B part, please. Guys, not under 24, not under 23, 22, so under 23, not required to be registered because an agriculturist. Remember, guys, agriculturists can only be individual or HUF. Very good question, guys. Fourth question, please try. Pure Oils Delhi, supplying machine oil and diesel in the month of April. Guys, what is the aggregate turnover of machine pure oils. Please tell me the aggregate turnover of pure oils. Aggregate turnover means everything including diesel that you supply. So the aggregate turnover is 10, 20 and 35 lakhs. Now guys, are they making any, first check for 24, section 24, is there any compulsory registration? They are supplying in Delhi, and the Punjab branch is also supplying in Punjab, so no interstate supply, no compulsory registration. Check for 22 guys, is pigs applicable to them? Are they doing prohibited goods? No. Are they doing interstate? No. Are they doing only goods? Yes. And are they in the states of NT, Mami or Putsam? No, they are in Delhi and Punjab. So hence the limit is 40 lakh. They are right now at 35 lakh. So no registration required. Guys, what if in the above question at serial number 2, only serial number 2, Pure Oil supplies high speed diesel in Delhi in the capacity of an agent? What if Pure Oils is an agent? Only for point number 2, what if they are agent of mixed oils? Will they need to be registered? Guys, this is only diesel. In diesel, will mixed oils be registered, guys? No. In mixed oils, if mixed oil is supplying diesel, they are not registered. And if your principal is not registered, will you have to be registered? No. That's a very, very good question. Again, I repeat, if Pure Oil is an agent of mixed oil, if the principal is taxable, here the principal is not a taxable person and hence you will not have to be registered. Alright. Guys, going to the next question, over to you all. The sixth one, examine where they are liable to get registered. First check 22, then check 24. Over to you all, the first one. Guys, his turnover in the current financial year is 33 from Assam and 11 from Tripura. They are only making intrastate supply, so 24 does not apply. For 22, what is the aggregate turnover, guys? Aggregate turnover is 44 lakh, because aggregate turnover means everything, one pan, one turnover. And they are in Tripura, so step 1 does not apply. Step 2 applies, the limit is only 10 lakh and they are at 44, so registration, yes. Next guys, please do the second one. Guys, this is only intrastate, so 24 doesn't apply. 22, let's check. Aggregate turnover is 22 lakh. First is pigs, P-I-G-S. Prohibited goods, no. Interstate, no. Goods only, yes. And are they in Putsam or NT Mami? No. So 40 lakh limit, they are at 22 lakh, no registration required. Next, third one please. Guys, here Harshit of Himachal Pradesh, he is trading in pan masala, so pigs does not apply to him, guys. So either can be 20 lakhs or 10 lakhs. He is in Himachal Pradesh, so the limit is 20 lakhs. So guys, because step 1 does not apply, pigs does not apply. Step 2 does not apply because he is not in NT Mami. So step 3, what is the limit? The limit is 20 lakhs. So hence he is already crossed that, so registration required. Next guys, examine whether the following are liable to get registered. Again guys, the first one please, over to you all. Ankit of Assam. Guys, Ankit of Assam, intrastate and taxable services. So step 1 pigs will not apply because he is not doing goods, he is doing services. Step 2 will not apply because he is not in NT-MAMI. So step 3 is 20 lakhs, he is at 25 lakhs, so registration required. Next, Sanchit of Assam. Intrastate goods and services, so step 1 will not apply because there's also services. Step 2 will not apply because they're not in NT-MAMI. So step 3, 20 lakhs, they're at 30 lakhs, so registration required. Great. What are the advantages of taking registration? You can take ITC and you can charge your customers GST. Can a person without GST collect GST without registration? No, they cannot. Guys, please answer the 10th question. No, you require separate state-wise registration. Next, 11th question. In a state, can you obtain different registration? Yes, you can. 12th question, please. Can you get voluntary registered? Yes. 13th question, please. Yes. 14th question, please. Whether registration granted to any person is permanent? Yes, it's permanent, except casual, taxable and non-resident. Otherwise, all registrations are permanent, guys. Why will the government cancel registrations? Unless cancelled, guys, it goes on and on. Next, is it necessary for UN bodies to get registration? No, they only have to get UIN number. Next, guys, is the 17th question. What is the validity period? No, guys, wrong answers. 90 days is not the validity period. The amount of days, number of days applied for, or 90 days, whichever is lower, that's the right answer. I hope you're understanding. 90 is the maximum. They've not asked maximum, they've asked validity period. 18th question. Registration can be cancelled under section 29. Sorry, here 29. Next, 19th question. Can they take centralized registration under GST? No, you have only state-wise registration. And last, 21st question, guys. All right, principal place of business and additional place of business, guys. This is your registration chapter. We'll see lots more sums in the MCQ booklet and in the exams, don't worry. But guys, this one is a very important chapter down, which is called registration. So we have looked at registration chapter. We've looked at all the module questions. We'll look at more, don't worry. But right now it's time for another exemption. We did healthcare services. I'm doing the next exemption. Very important is the next exemption, because it covers a lot of exemptions together. Or actually no, let's do another one, charitable or religious trust. Charitable and religious trusts. Let's do this exemption and then let's move forward. What is charitable and religious trust, guys? My favorite is Tirumala Trust, Tirupati. They are a religious trust. They are registered under some income tax act, and they do very good work, social work also. They do hospital also. They do really good work. Does the government want to charge GST on such people? No, the government doesn't want these trusts to pay GST for unnecessary. They're not doing any business, guys. They're doing charity. So hence the government says that if you are registered, only for registered, yes, if you are registered, then the following are your exemptions. First, any services that you provide in the nature of HEER. What is HEER? Let's see. If you are a trust providing healthcare services like to terminally ill patients, to underprivileged people, to AIDS patients, HIV patients, etc. Very, very poor people if you're providing health services to, and if you're charging a nominal amount on that, there will be no GST. If you're providing education, but education again to underprivileged children, skill development to people who are senior citizens in rural areas, not urban areas, guys. Then environment, which includes for wildlife and forest. And R is religion, spirituality and yoga promotion. If you're doing any of this, then your services will be exempt. Healthcare, education, environment, wildlife and forest, and R is religion, yoga and spirituality. If you're doing any of this, then it will be exempt. Great. Besides that, if you're doing yoga camps, guys, yoga camps means people come for yoga plus stay plus food, that is composite supply with yoga being the principal supply, and hence that is also exempt. Next, if you're running old age homes, guys, old age homes is a very nice thing for old people, and if you're running an old age homes for people who are more than 65 years, for people who are more than 65 years, and you're charging maximum 25,000 per month, then that will also be exempt. Also, if you're providing any training in sports, but recreational training, not professional training, recreational training, recreational means only hobby, then that is also exempt, only for sports, only for registered trust. And last, guys, if you're a religious trust like Tirumala and they have rooms which they rent out, renting of rooms, they have some halls which they rent out, and around their temple there are some shops which they rent out, then if the rent is low, it will be exempt. How low? Rooms less than 1,000, halls per day, halls less than 10,000 per day, and shops less than 10,000 per month. Guys, please see the symbol very carefully. It should be less than. What if in the exam they give you exact 1,000, 10,000, 10,000, then it's taxable. It should be less than, because guys, remember, they are religious and charitable trust. Should they charge less? Yes. So hence remember, less than, less than, less than. All these are exempt. Yes, all these are exempt. Only if you are registered. Yes, only if you are registered. But what if I'm not registered? What if I'm anyone? For anyone, these are the following exemptions. If you're a Pandit, or if you're a priest, or if you're a Maulana, and you conduct religious ceremonies and you charge some money, there is no GST on that. As a CA, I feel bad because Pandits don't have to charge any GST. I have to charge GST to my clients. Next, if there is a Pandit, priest, religious, Maulana, etc., that is exempt. If you are doing any arts training, arts means Indian classical art, yes, not Western, Indian classical art, like dance, Kathak coaching you're doing, or some painting you're doing, or dance or singing, classical, Indian classical singing, all of that, that is exempt for everyone. Yes, A for all, A for all, A for arts. And sports is only for registered trust. Arts is for everyone, A for arts, A for all. Next, if you are a Hajj committee, or if you are Kumao Vikas Mandal Nigam, and if you are organizing Hajj tours, or if you are organizing Kailash Mansarovar religious pilgrimage tours, then that is also exempt. So guys, remember, Hajj committee and Kumao Vikas Mandal Nigam only, not your skiing trip which happens in Shimla, not that one. So only these two. Arts training for everyone, only Indian classical, and Pandits, etc., that is also exempt. But what if Tirumala Trust, guys, buys an AC? Will they have to pay GST on this? Guys, please tell me, if Tirumala Trust buys an AC, will they have to pay GST on it? Yes, they will have to pay GST on it. And will they get any credit? No, because the government doesn't get any GST from them, so hence they will not get any credit. But what I'm trying to tell you is that all their inputs are subject to GST. Yes, all their inputs are subject to GST except one. If you're a trust and you get services bahar se, bahar se basically means from abroad, if you get some services for charitable purposes, then that is the only one which is exempt. That's the only input which is exempt. So in case of inputs, are all inputs taxable? Yes, all inputs are taxable except one. Which one? Importation of services purely for charitable activities. So guys, this is another exemption. I can't wait to test exemptions from the module, but once we finish all the exemptions, then we will test it. This is charitable and religious trust. Guys, charitable and religious trust, remember here, remember yoga camps, remember old age homes, 65 plus, maximum 25,000. And in education, there is skill development also of people above 65 years and in rural areas, not in urban areas. Sports, renting of rooms is very important, halls and shops. Pandits, arts for everyone, and Hajj committee or Kumao Vikas Mandal Nigam. That is another exemption, which is charitable and religious trust. Perfect. Guys, now we are moving ahead to a very, very important chapter called ITC. It is a chapter like no other chapter, and 8 marks will be there from this chapter out of 40 marks for sure. So what we will do is we will take a 5-minute break here. We will come back and we will enter into the world of ITC in 5 minutes from now. Thank you. Alright, and over to the next leg, guys. The next chapter, it's one of my favorite chapters because it gets like great marks in the exam. Importance, time of supply is also done, and here is input tax credit. Guys, before we discuss input tax credit, think about credit as a Paytm money in your Paytm account. Can you use that money? Yes, you can. Is money good? Always. So hence input tax credit has to be thought from that perspective. First, let's discuss electric bike company here. This is electric bike company. They, as you know, manufacture electric bikes, and for that they are buying some batteries, and they have a credit. Let's say on batteries they paid GST of 16,000 rupees or 1,60,000 or 16 lakh, doesn't matter how much amount. But this is battery supply company, and they have supplied a battery to electric bike company. Now on electric bike company, their supply is taxable. So is the government happy? Yes, because they are going to get GST. And hence, will the government give a credit of this 16,000? Yes. So first, credit can be taken, yes. But how does the government believe that electric bike company should get credit? So they will ask battery supply company that, hey, battery supply company, can you tell us during this month of February who all have you supplied to? And battery supply company will issue a statement of how many people they have supplied to, and one of the persons will be electric bike company. So the government doesn't believe you, they check it from the suppliers whether they've actually supplied to you or not. There are some conditions of taking credit, only then can you get credit. Next, these batteries should be received by you. That means if they are received in lots, then whenever you get the last lot, not in parts. So let's say half the batteries you got, can you take 8,000 credit? No. Whenever you get the last lot, whichever month, that month you will get the credit. Alright. So there are some conditions. Let's start. The first condition, the first section is section 16. In section 16, subsection 1, they say that credit can only be taken if you are registered. So you should be registered. Yes, electric bike company is registered. And you should be using the inputs or the input services or the capital goods for business purposes. What should be using? You should be using the inputs like batteries, or input services like if you're getting some CA services, or if you're buying a truck, then that capital goods you should be using for business purpose. Using means even intended to be used. That means even the stock, even the batteries which are lying in stock, which will be used for business, you will get a credit of that. Yes. So two conditions, you should be using them for business and you should be registered. Is electric bike fulfilling the two conditions? Yes. Next, let's go to the next condition, section 16.2. Very important from an exam perspective, this next condition. The shortcut of this condition is DRGR. Watch out, what is DRGR? First, electric bike company should have a document to prove that they have this supply of inputs or input services or capital goods. What is the document? They should have an invoice or a debit note or a credit note or some document to prove that this supply has happened. And not just that, this document does not have to be physically uploaded. No, it has to be, details of this document have to be sent by the supplier. So the supplier has to upload the details. But guys, here is my problem. I am supposed to get credit, and for that I have to depend on my supplier. What if the supplier is delayed? What if the supply is not good? What if the supplier has a bad CA? And what if they don't upload the documents? If they don't upload the documents, I will not get this GST. That's right. And that is actually not a good thing, because you are dependent on someone else. It's like you are writing your exam. Your exam results will be given on someone else writing the exam. How is that right? So hence the government says, don't worry. I know this is not right, because for you to get credit, the battery supply company has to upload details. So don't worry. We are creating a Superman section called Rule 36.4. And Rule 36.4 says that if some supplier has not uploaded the details, let's say battery supply company forgets to upload the details, then don't worry. Whichever supplier has uploaded the invoices, you total that up, for which you are eligible to get credit, of course. So let's say besides battery supply company, you had other suppliers also, and you could take the credit. So total it up. Let's say that GST is worth 1 lakh rupees. That GST credit you will definitely get. But for that, you will get 5% more, that is 5,000 rupees credit you will get. So out of this 16,000, because they have not uploaded the invoice, you will not get 16,000, but whatever has been uploaded, based on that you will get 5% more, so 5,000 you will get. What about the uploaded invoice was worth 5 lakh rupees GST? So 5% of that is 25,000. Will you get 25,000? No, maximum 16,000, because 16,000 is what they need to compensate you for. So this is rule 36.4. Does the rule 36.4 help you? Yes, rule 36.4 helps you. Guys, this limit of rule 36.4 earlier was 20%. You would get 20%, then they reduced it to 10%, and now unfortunately they've only reduced it to 5%, barely 5%. So that is rule 36.4, which is, I feel, a Superman section. Next is R. R is receipt of goods. Have you received the goods, these batteries, or have you received the services? If you've received it, then you can take the credit. What you are supposed to receive them in lots, then the last lot, whenever that is received, then when you can take the credit. But what if you did not want the batteries, you bought it, but you wanted them to give it to a third party, and the third party has received the goods? That means it's as good as you received the goods. Example, guys, if you are not at home and an Amazon delivery guy comes and he calls you up and you say, listen, give it to my neighbor, and he gives it to the neighbor, it's almost like you getting it. So hence, received on the last lot, yes. And if it is bill to ship to model, what is bill to ship to? It's billed to one person and shipped to the other person. Then when the other person gets it, it will be assumed that you have also got it. That is the next condition, DR. Next, GR. If you want this GST credit of 16,000, the government should have got this 16,000 rupees. G is government. The government should have got the GST. But guys, how will the government get it? Battery supply company will have to pay. But do you have to pay it? Do you have to pay immediately? In business, guys, do you pay immediately when you buy something in business? Do you make an immediate payment? No. You, even if you don't pay, it's okay right now. But how will the government get GST? Because battery supply company will have to pay this 16,000. Guys, 1 minute. Actually, guys, you are supposed to pay battery supply company, and battery supply company has to pay to the government. That's the process. But in business, you don't pay immediately. So the government says no problem. But battery supply company has a problem here. They say, even before electric bike company pays me, how am I supposed to pay to the government? I don't have the money. So the government says you have to pay. Battery supply company, you have to pay. Electric bike company can pay you later, but right now you have to pay from your own pocket. But we will make sure that electric bike company pays. So they have another Superman section called Rule 37. And Rule 37 says that electric bike company, you have to make sure you pay them within 180 days from the date of invoice. That means, guys, please tell me yes or no. Do I need to pay the money today? Does electric bike company need to pay battery supply company today? No, they don't need to pay today. So can I pay later on? Yes, you can pay later on, but how much time do you have to pay later on? I can pay within 180 days. What if I pay within 180 days? Nothing. You've done something that you were supposed to do. Congratulations. But what if I don't pay within 180 days? Then let's say my 180 days gets over in the month of September. Then whatever credit you have taken, that is 16,000, you will have to reverse. That means you will have to pay the government. Yes, because you took a credit and you've not paid, so you've done something wrong. So the government gets angry. They say in whichever month the 180 days period gets over, you will have to pay this money, 16,000, to the government. And not just that, you will have to pay interest also. So in this month of September, you will reverse it with interest. Interest from the date you availed the credit. Yes. Why so much? Because you broke your promise of not paying within 180 days. But what if you pay in 240 days, guys? In September you had to pay. What if you pay in October? Then don't worry. If you pay, you will again get 16,000 credit. So guys, credit is yours only. If you don't pay within 180, you'll reverse it and then you can again take it back. It's like passing the parcel. First, this pen is with me, then I can give it to you, you can give it back to me. But interest, you will not get interest is gone, and hence please make sure you pay people within 180 days. So rule 36.4 is Superman and it protects whom? Electric bike company. It gives them 5% extra. And rule 37 is a Superman for whom? It is for battery supply company. It gives protection to battery supply company. At least they will get money within 180 days. But guys, if there is no payment, then there is no rule 37. If the supply can be free of cost, if the supply is free of cost, then there is no rule 37. And if electric bike company is going to pay the government under reverse charge mechanism, then there is no rule 37, then the government doesn't care. So rule 37 does not apply in two cases. What are the two cases? No rule 37 in two cases. Which ones? One, if there is RCM, then the government doesn't care whether you are paying the supplier within 180 days or not. And second is when there is no consideration, then the government doesn't care. The rule 37 disappears in those two cases. Next, DRGR. The last is return. Electric bike company, do you want 16,000 GST? Yes. Do you want credit? Yes. Then make sure whatever returns you are supposed to file, please file them, else you will not get the credit. So DRGR. That is section 16.2. Next guys, let's forget battery supply company. Let's say electric bike company has bought a truck. Electric bike company has bought a truck. The truck is for 10 lakh rupees. And on that GST is 1,60,000. 16% or 1,80,000. 18%. So this is the GST component and this is the cost of the truck. Now, this is the balance sheet. In the balance sheet, electric bike company, if they take the entire 11,80,000 and they take depreciation on this, then the government says, listen, you've already taken GST to the balance sheet. Now you cannot take it to your credit ledger. That means when you take 11,80,000, are you going to get higher depreciation? Yes. On that 1,80,000 also, are you going to get depreciation? Yes. So guys, you can only go on one place. If you are doing CA, can you also do medicine? No, you can't do medicine together. If you are doing CA, can you also do astrophysics? No, you can't. So you can only do one thing together. Hence, if you take this to a balance sheet, you don't get any credit. But what if I only take 10 lakhs rupees here? Then no problem. You only taken 10 lakh here. So then no problem. Then you can take credit of that 1,80,000. So this 1,80,000 will travel only to one place, either to the balance sheet and you can take depreciation, or you can take direct credit. Obviously someone would take debit and direct credit. Why? Because depreciation is a very slow process, guys. 15%, 20%, 10% every year. But direct credit means the entire credit you get at once. So this is section 16.3. 16.3 says that if you've taken GST to the balance sheet and you're claiming depreciation, then you will not get any credit. And last is 16.4. Guys, lots of things have expiry periods. Like the food in your fridge, the chocolates in your fridge, they all have an expiry period. The medicine in your medicine box has an expiry period. Same way, even GST has an expiry period. Let me show you what is the expiry period for GST. Let's say this is electric bike company and they have bought some batteries today from battery supply company. Today is the 27th of February. There is a GST of 16,000 rupees, but unfortunately they are not finding the invoice. Guys, if they don't find the invoice, the document is not there. So will you be able to take credit? No, you're not able to take credit. So by when do I have to take the credit? Guys, this is which year? This is the year 21-22. In this year, if there is any credit that you have to take, there is an expiry period which is earlier of the two dates. One is the September return due date. Guys, return for a particular month has to be filed by the next month on the 20th. So September return due date is 20th October. Or the actual annual return filing date. The return filing date is 31st December, but this is the due date. What is the actual return filing date? Let's say you file your return on 20th November. Then what is the expiry period of this year's credit? The expiry period will be earlier, that is 20th October. And what if you file your return in 20th July only, very proactive, then 20th July. So basically, one particular year's credit, does it expire? Yes. You need to take it to the credit ledger before earlier of these two dates. Earlier of these two dates, you need to take the credit. Otherwise, you will not be able to take the credit. Nandish, if you open your fridge, is there chocolates in your fridge which will have an expiry period? Can you consume the chocolates after the expiry? You cannot. Same way, even one particular year's credit has to be taken to the credit ledger by a particular period. What is that particular period? Earlier of two dates. What are the two dates? September returns due date. Every month you have to file GST returns. So the September return has to be filed by 20th October. Is this a fixed date? Yes, this is a fixed date. And what is the other date? The annual return filing date, not the due date, annual return filing date. So whenever you file a return, let's say your annual return is filed on 20th July, after the year ends, obviously you file your annual return, then 20th July is earlier. But what if this is 20th November? Then 20th October is earlier. So whichever is earlier will you take? Yes, we'll do some sums on this, don't worry. But these are the two due dates. Yes, whichever is earlier will be the expiry period. But guys, once this 16,000 is taken to the credit ledger, you can use it whenever. Please tell me guys, when money is in your Paytm account, when you have money in your Paytm account, can you use it whenever you want? Yes, when money is in your Paytm account, you can use it whenever you want. But to take it to the Paytm account, there is an expiry period that is given in section 16.4. We'll do some sums on this, but I'm just telling you an example. For the year 21-22, which ends on 31st March 22, what is the expiry period? There are two dates. The first date is the September return due date, that is always 20th October. Yes. This date is fixed. Yes. And the second date depends upon when you're filing an annual return. If you file your annual return in November, then 20th October is the earlier date. And if you file your return in August, then August is the earlier date. So whichever is the other date, that or this, whichever is earlier, that will be your due date by when you should take or by when you should consume the chocolate. Alright. So these are four conditions guys in section 16.1. 16.2 has DRGR, which has rule 36.4 and rule 37, important. And we had 16.3 and we had 16.4. Very, very important. We'll see the practical application. There are lots of questions waiting for us, as you can see on the screen. We will do those questions, but right now we have to move ahead. So 16.1, two conditions. You have to use it for business purpose and you should be registered. 16.2, four conditions. Document. You should have received the goods. The government should have the money and you should have filed the returns. 16.3 is basically if you take depreciation, then you cannot take ITC. It cannot be at both places, both benefits. And 16.4 tells you an expiry period. After the year ends, the expiry period starts 20th October or the annual return filing date. These are the conditions for taking ITC. Yes, these are the conditions of taking ITC. Now, guys, this is Electric Bike Company. They are registered, as you know. And every week they throw a party for your employees. And when the caterer comes, the caterer charges, let's say 10 lakh rupees plus GST. They happily pay GST because they think they'll get a credit of that GST, which they should, because it's for the purpose of the business to keep the employees happy. Next, Electric Bike Company has bought a nice fancy sports car for the CEO to ride to office. Again, they feel the GST on that, they will get a credit. But the government says, listen, there are some credits which unfortunately I can't give it to you because we don't know whether it's actually for business or not. There are some credits which we have blocked, and that is the next section, guys, what is called blocked credit. Very, very important. Section 17.5. Section 17.5 says blocked credit or be blocked, actually blocked credit. What is blocked credit? Means all the conditions are being fulfilled. DR, GR, everything is being fulfilled, but still the government says, listen, I'm sorry, I'm unable to give you that credit. That is called block credit. Let's first understand the first block credit, 17.5A, or before the section, I will tell you the first block credit on cars. The first block credit is on motor vehicles. So if Electric Bike Company buys a car for the CEO, buys a truck, buys a bus for the passengers, which will get credit, whichever has the shortcut is GST please written on the number plate. Yes guys, this is a shortcut. Whichever has GST please written on the number plate. What is GST please? If the motor vehicle is for goods transport like a truck, will you get credit? Yes. If it's in the same line of business, example, you are Hyundai Motors, you are buying a car for selling it ahead or for giving it on rent ahead or for using it as Uber ahead, then you'll get credit. Yes. If it's for training of people to drive cars, a motor training school or a pilot training school, then you will get credit. Yes. And last one is only and only for passengers. This is if the passengers, if it's like a bus, and if it's for more than 13 passengers, including the driver, the number is more than 13, guys. 13 is an unlucky number. So more than 13 you will see. If it's for more than 13 passengers, only then can you take this. This, guys, is for VAM. VAM is vessels, aircraft and motor vehicles. So as a business, whenever you buy a vessel or an aircraft or a motor vehicle, you have to check GST please, yes, but please is only for motor vehicles. I repeat, whenever you buy a vessel, an aircraft or a motor vehicle, will you get ITC? Depends upon whether there is GST please. What is GST please? If it's for goods transport, you'll get it. If it's for same line of business, that is you're buying to sell it or rent it ahead, you'll get it. If it's for training of people of driving school, etc., you'll get it. And if it's P is only for motor vehicles. If it's for more than 13 passengers, including the driver, that means it's a big bus, mini bus, etc., only then will you get credit. And once you get credit, once the motor vehicle or VAM is eligible to get credit, when you send it for repairs, maintenance, etc., insurance, then, or even when you lease it, if the main vehicle is okay, then the GST that you pay even on maintenance, even on repairs, even on insurance, even on leasing, etc., if you pay any GST, will you get a credit of that? Yes, you will get. But if the main vehicle is not allowed, then even on maintenance, repairs, insurance, leasing, you will not get. That is what is GST please. That is what is VAM. The section is 17.5A. AA and AAB doesn't matter, guys. As long as you quote 17.5, you're good to go for this. So 17.5 A, AA and AB is VAM, vessels, aircraft, motor vehicle, GST please, only that is allowed, otherwise it's not allowed. We will do a question on this, it's waiting for us here, but that we will see when we see that question. Next. Guys, if you are Electric Bike Company and you have food and beverages, let's say you throw a party and if you have food and beverages, F&B, that is not allowed. If you've taken life insurance for your employees, etc., that is not allowed. If you have sponsored travel for your employees and you paid GST, on all these you will not be able to take credit. Guys, can you have a party in your office, food and beverage? Yes, but credit you will not get GST. Same for life insurance, same for travel, and same for beauty treatments, etc. surgeries, beauty treatments, you will not get any credit. No, this is 17.5b. B is for beverages, B is for beauty, you will not get. There are two exceptions. One is if you're in the same line of business. Example, you are doing food and beverages, you are a caterer and you are taking this so that you can supply it ahead. Same line of business is perfectly okay. And if it's statutory required, statutory means by law it's required, then it's okay. Main vehicles are 3: VAM, vessels, aircraft and motor vehicles. Alright. That is 17.5b, unless guys it is statutory required or unless it is same line of business, otherwise guys you will not get this. That is 17.5b. Next guys is 17.5c. C is for construction. You want L&T to construct a building for you called Electric Bike Company building. So this is construction of an immovable property. Yes, you want L&T to construct a building for you. L&T said, okay, I will charge you 1 crore plus GST. On this building, no ITC is allowed. Why no ITC allowed? Because when you sell this building, guys, please tell me, when you sell an immovable property later on in future, will the government get GST? No, and hence the government doesn't give credit. Except on 3 things. The shortcut is PSP. If this is a plant and machinery or even the foundation of plant and machinery, then allowed. If it's in the same line of business, if you are L&T and you're taking these services to supply it ahead, then allowed. And if it's debited to P&L account, it's allowed. So any of these 3, yes. Again I repeat, if it's plant and machinery including foundation of plant and machinery, then allowed. If you're on the same line of business, then allowed. And if it's debited to P&L, then it's allowed. And guys, immovable property includes any telecom towers, that also you will not get ITC, and any pipelines outside your factory, that also you will not get ITC. So immovable property includes pipeline as well as telecom towers. You don't get ITC except PSP. 17.5c. C is for construction. Guys, what if you don't want to go to L&T? What if you want to construct this building yourself? You hire an architect, you buy cement, steel, etc. and you engage workers to build this building, then still you will not get any credit of the architect's GST or the cement GST, etc. Why? Because again you're making immovable property. So 17.5d is develop yourself, D is for develop yourself. Still you will not get ITC except PSP. If it's a plant and machinery including foundation, if it's same line of business, or if it is debited to P&L account. Next guys is a composition scheme dealer. You know, composition scheme dealers have a very easy life. They need to wake up only 4 times. They need only 151%. So these are very easy people. And when these people buy something, will they get credit ITC? No. Simple logic is because the government gets only 151%, they will not get credit. So that is 17.5e. E is for easy composition scheme. Next, 17.5f. If you're a non-resident taxable person, example Tesla, and you're coming to India, then you can also get inputs. Example, you can hire a CA and you can have CA services. You can also buy something, but you will not get ITC. No ITC for 17.5f. Foreigner. Who's a foreigner? An RTP. Except when you import, your Tesla imports their cars and they pay import duties, that credit you will get, but that is for CA finally. So 17.5f is also blocked. F is foreigner, that is non-resident taxable person. If you're electric bike company and you want to take some assets ghar pe means personal purposes. If you have some personal purposes, then you will not get ITC. So 17.5g is ghar pe, you will not get. For personal supply, you don't get ITC. But what if you already taken ITC? Then this will be considered as supply. You know already 17.7.1c. But if you have not taken credit, if you know that this is a personal supply, ghar pe, G, personal supply, you won't get ITC. Guys, all this is block credit. All this ITC you will not get. Next guys, if you give away samples, does samples means free things? Does it make people happy? Yes. But it doesn't make government happy. So on samples, because the government doesn't get any money, they say you can't even take any ITC. And guys, what if the bikes catch fire and they get destroyed? There are bikes which are ready in your electric bike company's factory and they catch fire and they get destroyed. Does the government get GST on those bikes? Then no. So they will not even get you ITC. So that is unhappy. Fire will make you unhappy. Samples will make people happy. So happy, unhappy, 17(5)(h). On samples and goods destroyed, lost, theft, stolen, etc., you don't get any ITC. Unfortunate. And last, guys, if the government feels that you have taken some credit by fraud, you are trying to take some credit by fraud, misrepresentation, etc., then they can block this credit for a certain period of time, during which they will investigate you. Yes, 17(5)(i), I is for investigate. They can block this credit if it's on order of fraud, etc. We will see it ahead in another rule called Rule 86A, but right now this is blocked credit. So guys, just revising block credit, please tell me, in case of block credit, what is the section? Section is 17(5). In block credit, are you purchasing something? Yes. But will the government give you ITC or credit? No, they will not give you. So what is the shortcut? Guys, 17(5)(a) is for vessel, aircraft and motor vehicles. When will you get credit, guys? When will you get credit? Only if it's GST, please. Goods transport. S is same line of business, even including selling or renting, like using an Uber. T is training and P is passengers. How many passengers, guys? Please tell me in the chat box. How many passengers? More than 13. 13 is unlucky, so more than 13. This last one is only for motor vehicles. And if the main VAM is allowed, then even the maintenance, insurance, repairs and leasing will be allowed. 17(5)(b), what is the keyword, guys? B is for beverage, B is for beauty, club membership, food, unless statutorily acquired. 17(5)(c) is for construction, again PSP, remember construction of immovable property, remember telecom tower, remember pipelines. 17(5)(d) is develop yourself, same like 17(5)(c). 17(5)(e) is composition scheme easy. 17(5)(f) is non-resident taxable person, which is a foreigner, not allowed. 17(5)(g), which is ghar pe personal supply, not allowed ITC. 17(5)(h), happy and unhappy. Happy is samples, unhappy is fire, accident, etc., not allowed. And 17(5)(i), when they investigate and they find that you've done some fraud, etc., in that case also it will not be allowed. So this is block credit. In all these cases, you will not get any GST credit. The government has not allowed this. Perfect. We'll do some good sums on this, but right now it's time for section 17(1) and 17(2), and there is some really good news because something is not there in your curriculum from this, which I've marked in red as well. Guys, here is electric bike company. You tell me, if they are making any taxable supply, is the government happy? Yes. So will they give credit on this taxable supply? Yes. What if you are making zero rated supply? Is the government happy? Yes. Why? Because zero rated means you're exporting, etc. The government is happy. Although they don't get GST on this, but they're still happy. Will you get ITC credit? Yes, you will get. But this is for CA final. But guys, what if you're making some exempt supply or some personal supply? Is the government happy? No. So will they give you credit? No. Which is very simple. But guys, what if there is one input which is being commonly used for all? Then you will have to apportion it, and that apportionment was a very complicated Rule 42 and Rule 43, which thankfully has been out now. ICAI said get out and go to CA final. So these two are now at CA final. So what is 17(1) and 17(2) saying? 17(1) and 17(2) say that if it's taxable supply or zero rated supply, then you will get the credit, otherwise you will not get the credit. And for common supply, then you will have to apportion it. For that you will have to read CA final, guys. I can't wait to teach you at CA Final as well, because these same chapters are there at CA Final with some additions. Alright. And the last section in 17, that is 17.4, everyone on the screen, 17.4. Guys, if you have a bank account, that bank has 174 branches. You have to think like that, otherwise how will you remember 17.4? So what is 17.4? 17.4 is only to be used by banks and financial institutions. So they have two options. If they want, they can apportion the credit based on Rule 42 and Rule 43, but that is complicated. So hence we are offering them a very, very good second option. So Rule 42 and Rule 43 is there for banks also, yes, but they have another option. Yes, we don't have, but banks have this option. What is the option? Let's say your Axis Bank, and this month you have taken some input services from a CA. You have taken some services from another Axis Bank. Let's say your Axis Bank Maharashtra. You've taken services from Axis Bank Gujarat. And there are some other input services which are blocked. Let's say you bought a car for your CEO. So this is blocked. So they say first take all the credit. Let's say all the credit is 12 lakhs. Then from this, remove the one which is blocked. So let's say on the car there is 2 lakhs of credit which is blocked. So that gives you 10 lakhs. Then from this, whatever you are getting from your deemed distinct person, like Axis Bank Gujarat, that you remove. Let's say that is 3 lakhs. Why remove that? Because you'll get 100% of that. So in your electronic credit ledger, you can take 3 lakh. Yes, you can take the entire 3 lakh. And of the balance, because you don't want to use Rule 42, 43, what you do is we are assuming 50% of this is not allowed because it will be used for exempt supply, etc. So only 50% is allowed. Yes, so 3,50,000 gone. So how much? 3,50,000 remains, which you can take to your credit ledger. Guys, this is the option which banks have under section 17.4. So do banks have an option? Yes, banks have an option under section 17.4 where they can use rule if they want, but if they don't want, on the eligible credit, they can remove deemed distinct person credit, which they will get 100%, and the balance they will get 50%. Guys, this entire session is recorded. It's not possible for me to repeat entire thing. Please understand. So if you don't understand a small concept, put it on the Telegram group. Ask your friends also to help you. Please understand, it is not possible in a fast track course to explain concepts again. You can always watch this recorded either on YouTube, on my channel, or here as well. I hope you understand, Abhi. Thank you. Perfect. So do we all have this option? No, only banks have an option. I'm just summarizing it. Only banks have an option under 17.4. If they want to apportion the credit using the rules, they can, but rules are complicated even for banks. So for the banks, they have an option. Take the total ITC, yes, for the month. Remove the one which is blocked credit. On the balance, remove the one which is from deemed distinct persons because you will get entire thing, yes. So entire 3 lakh has been taken to electronic credit ledger. And from the balance, you can take 50%, 50% is removed and you can take 50%. So even this comes to 3,50,000 and 3 lakh. So what is the credit for this month? 6,50,000. So this is how it is. We are moving ahead now to the next section, that is section 18. So 18th, and then there is some payment, which is, and then this big chapter comes to an end. Guys, we are going very, very steady. In this session, we will be finishing registration. We've already finished. We finished 2 exemptions. We will be finishing ITC as well with the questions. Yes, with the questions, I'm very confident we'll be finishing. And then in the next session, we will do the chapters like payment, return, invoice, etc. So with that, we'll take a 3-minute, 4-minute break here. I'm feeling a little tired, so 3-4 minute break here. We'll come back and we'll continue from here. We were doing every module question. Be with me. And guys, for whoever can't watch it recorded, or you can also watch it on my YouTube channel. Thank you so much. 5 minutes and we'll be back. Alright people, the next section is going to be slightly challenging, so I want whatever attention you can give on a Sunday afternoon after a good lunch, double it up and give me that kind of attention for this next one. This one is section 18. Guys, section 18 is special circumstances. How do you remember it? Guys, 18th birthday is always special. So section 18 is special circumstances. What is so special about it? Let's check. Guys, at 18 you get a new voter ID. At 18 you get a driving license. So at 18 new things are happening even here. There are 4 situations in 18.1 where the government smiles now. You know why the government is smiling? Because the government gets ITC. Register, voluntarily or credit, expires. These are 4 situations, and you, while I explain the situations, you have to imagine the government smiling. Guys, when you register, will the government now start getting ITC? Yes. When you voluntarily register, will the government start getting GST? Yes. When you come out of the composition scheme, your composition scheme is ending, will the government now get more GST? Yes. And when your exemptions are over, that means your supply is now no more exempt, will the government get GST? Yes. So in all these four situations, you can see the government smiling. And guys, if the government is smiling, will they give you credit from that day which you register or voluntarily register? Yes. But the problem is that you will give me credit. Let's say today is the day 27th Feb, where you get registered or voluntarily registered, or you come out of the composition scheme, or your supply becomes taxable. But what about my stock which I have? What about the inputs which I have in my stock? What about the batteries which I've already bought? What about their credit? The government says no problem, you are going to sell it now, and whenever you sell, I will get GST, so you can take credit on also on the stock. So here it is, watch carefully. If you are getting registered because you were liable to register, etc., then first find out the effective date. You know, within 30 days if you apply, your effective date will be the older effective date, and from the effective date, even your stock, will you get credit on your stock? Yes, you will get ITC on your stock. So if you are electric bike company and you are now getting registered today 27 Feb, then last night whatever is your stock, whatever batteries were in stock, you will also get credit of that from today. Yes, you will get credit of that. But what about capital goods? What if I bought a truck? Sorry, not on capital goods, only on the stock. Will you get ITC? Yes. If you're not supposed to register but you still voluntarily register, still the government says no problem. If you voluntarily register also, whatever is your stock, I will give you ITC on your stock. Yes, but not on, only on your stock. Yes, only on your stock, not on capital goods. No, not on capital goods. But guys, here in composition scheme, you're already registered, but you're in the composition scheme. Now you're coming to the regular scheme. So will you get ITC on the stock? Yes, you will get ITC on the stock. So are both these similar? Yes, both these are similar. You get ITC on the stock, but not on capital goods. So I'm just removing both of them. I'm just putting one of them and I'm just writing the same. So both are the same. On stock you get, on capital goods you don't get. But in these two cases, because you were already registered, now you're just changing the mode, etc. Now you're getting your supplies to be taxable. On the stock, obviously you will get ITC, but on the capital goods also that you've bought. Let's say you bought a truck for your business, that is a capital good. Yes, even on that you will get ITC. Yes, but there's a small condition. Let's say electric bike companies, electric bikes were earlier exempt, now they are taxable. So if you bought a truck on which you paid GST of 1,80,000, the government says, listen, how many ever quarters you've already used it, we will minus 5% because you've already used, it's a used truck. Guys, if someone sold you a new car, you will pay the full price, but if someone gave you an old car, you will minus some price, right? Same way, the government says, for how many months, or not months, or how many quarters did you use it for your exempt supply? Let's say you use it for 5 quarters, then for 5 quarters into 5%, 25% we will not give you, but 75% credit we will give you. Now how do you calculate quarters? Quarters are fixed, guys. April, May, June is the first quarter, and onwards July, August, September, October, November, December, Jan, Feb, March are all 4 quarters in a year. But when you're calculating quarters, even if the asset is bought today, that is 27 Feb, will this Jan, Feb, March quarter count? Yes. Even if it's bought on 31st March, the quarter will count. Yes. The entire quarter, or even one day, the quarter will count. So guys, in these 4 cases, register voluntarily, credit expires. When you are registered or voluntarily registered, you get the ITC on stock, but not on capital goods. But when you move out of the composition scheme, or when you move out of exempt supply, you get on both, but capital goods you have to minus 5% per quarter for the period before. And section 18(2) said that while on the stock we will give you ITC, the stock should not be very old. That means whatever is your date of effective registration, whatever is the date you come out of the scheme, etc., the stock should be maximum 1 year old. That means, guys, the maximum duration of the stock should be 1 year old. It should not be really old stock. So what is section 18.1 saying? 18.1 is giving you all the details, whereas 18.2 only gives one condition, that the stock cannot be more than 1 year old from today's date. That is the stock's invoice check. It should not be more than 1 year old. This, guys, is 18.1 and 18.2. Here we go. Register voluntarily, credit expires. 18.1a, 18.1b, 18.1c and 18.1d. And 18.2 says that in all the above scenarios, no ITC beyond 1 year from the date of invoice for the stock. Guys, here, how will you tell the government that these situations are happening? You will file something called GST ITC 01 because you are taking ITC for the first time. That is why GST ITC 01. You will fill this up and you file it. Yes, GST ITC to be filled up within 30 days of the above scenarios. And if the credit that you have to take, these credits if you have to take, if they are more than 2 lakhs, then you will need a CA to certify it that yes, you deserve so much credit. This is 18.1 and 18.2. Next, special circumstance. 3 things can happen. Electric bike company which is registered and which has, let's say, a credit in the electronic credit ledger. It has a credit of 10 lakhs. It is now getting sold, amalgamated or merged into another company, let's say Hero Honda Motors. Guys, when you're selling the company, are you transferring your assets? Yes. Are you transferring your liabilities? Yes. So will your credit also go to them? Yes, your credit will also get transferred. So in sale, amalgamation and merger, your credit will also go to the next entity, provided he is also taking over your liabilities. So if he is going to pay your bills, then he can take over your assets also. So guys, only if he is taking over your liabilities will he get the credit? Yes. That is section 18.3. In case of sale, 3 things: sale, amalgamation, merger. The credit will go to the next entity, yes. But now, guys, what form do you need to fill? How do you tell the government? You have to fill GST ITC 02. Excellent. Because why? One entity is sending it to another entity, and the other entity has to approve that form. Only then this transfer will happen. So the next entity will get the credit and they can pay the bills. This is section 18.3. So 18.3 is here. Transfer of ITC in case of sale, amalgamation, merger. Just one more thing. In case of merger, how much ITC will go to the next? Guys, merger means not the entire company is being sold, only part of the company. So based on value of assets, let's say 50% of the assets are being transferred, then 50% of the ITC will get transferred. It will be based on value of assets. The next two, before the next two, I want to do section 18.6. 6, S for 6 and S for sale. Guys, this is electric bike company and they bought a truck. Let's say they bought it last year in September, 20th September they bought it, and they bought a truck on which they got GST of 1,80,000. Guys, can I take a credit of this 1,80,000 immediately? Yes. For the month of September, they took it in the credit ledger. They took 1,80,000, and the government allows you to take a credit immediately with the promise that you are going to use this truck for 60 months. Okay. But guys, somehow you did not like the truck. So today, that is 27th Feb, you are selling the truck for, let's say, 8 lakh rupees. The GST that time also was 18%. Now also it's a truck, so GST will be 18%. So the government says, listen, you've broken a promise. We gave you credit of 1,80,000 because you had promised to use it for 60 months. And now that you've broken your promise, you have to pay GST under section 18(6), which is higher of the two amounts. What is higher of the two? First is very simple. Whatever price you're paying into the GST rate, so 8 lakh into 18% is you pay 1,44,000. Or B, whatever credit you had taken earlier, 1,80,000, how many quarters did you use? Take that. You deserve that. So from September or quarter is 1. So July, August, September, 1 quarter. October, November, December, another quarter. And Jan, Feb, March, today is Feb. So 3 quarters. That means 15% you could take. That is something you deserve. So 1,80,000 into 15%. That is 27,000 you can take. But the remaining 85,000, that is 1,53,000, that you will have to reverse it. So whichever is higher of these two amounts, that you will have to pay to the government. So guys, in this case, how much will you pay to the government? 1,53,000. I repeat this, guys, pay attention. This is section 18(6). Applies only to capital goods. Yes. Whenever you buy a capital good, can you take the credit of entire GST on the capital good? Yes, provided all the conditions are fulfilled. But you make a promise that you are going to use the asset for 60 months, that is 5 years, you're going to use the asset. If you sell it within the 60 years, then you have to compensate the government by paying higher of A or B. What is A? A is whatever price you sold at into the GST rate, and B is whatever the GST amount. How many ever quarters you used it, 5% per quarter you will get, but the other you will have to reverse. But guys, what if you sell after 60 months? Then this calculation will not happen. Only whatever you sell it at into GST rate. Why? Because you are registered, guys. Even when you sell this machine, you will charge GST. So this is 18(6). Until now, we are reversing everything. What is being reversed is 5% per quarter. We'll do a sum on this. Even in the MCQ booklet, there is a sum on this. But I am very tempted to finish section 18 with the last section, that is 18(4) and 18(5). Here the government has stopped smiling, guys. The government is upset here. Why? Because you are moving from a normal scheme to the composition scheme. Guys, in the composition scheme, does the government get a lot of taxes? Yes, 60 months is 5 years. Nandish, 60 months if you divide by 12 is 5 years only. I hope you understand. 60 months is 5 years. Yes. Okay. Alright. So guys, moving ahead to 18(4) and 18(5). Composition scheme. If you are going into the composition scheme, the government is unhappy because you are going to pay a very low rate. And if your taxable supply becomes exempt, again the government is unhappy because they are not going to get GST. So the government is not happy in these two cases. So they say, listen, from now onwards you are in the composition scheme, so you are going to pay us very low GST. Or in exempt supply, you are not going to pay any GST. So whatever credit you already have in your credit ledger, you need to pay off your liabilities and you need to disappear, you need to forego it. That is why 18(4) is forego, and this is rule 44. 4 and 4 forego. So how do you forego? I'll tell you. First, what is the liability for this month? Let's say for the month of February, you are supposed to pay 10 lakh GST. You have in your Paytm account 12 lakhs. So will you use that money? Yes, you'll use 10 lakhs to pay your liability. We'll see more in the payment chapter, but this is what you'll pay. So how much remains? 2 lakh remains. What will happen of the 2 lakh? You will have to forego it. Because now that you're in these two schemes, you can't take credit, so credit has to forego. And what if, guys, you did not have 10 lakh of credit? Then you will pay whatever you can from your credit and balance through cash. But what I'm trying to tell you, in 18(4) and 18(5), you have to forego. Yes, you have to forego. But what about the stock that you have? Guys, before this scheme, on the stock you were getting ITC. Now you will not get ITC, so whatever stock you have, you will have to reverse it. So let's say you had stock on which there was GST of 1 lakh. Guys, again I will repeat this for people who are not understanding. 18.4 and 18.5 are unhappy situations for the government, because from now onwards the government will not get any GST or very low GST. So in this case, whatever stock you have on which you already taken ITC, the government says, listen, reverse it, because I am not going to get credit, so you will not get ITC. So okay, 1 lakh reversed. And on the capital goods also, whatever ITC you have to take, you will reverse it, but for whatever months, here is months, for whatever months you have used it, you can proportionately take credit for based on months. Yes. So let's say before moving to the composition scheme or exempt supply, you used it for 10 months. So on that capital good 1,80,000, 10 months you will get, but 50 months, that is again 60 months is a total, you will have to reverse. So 1,50,000 divided by 60 into 50, 1,50,000 you will have to reverse. Again I repeat, on capital goods you took a credit of 1,80,000, but you don't deserve 1,80,000 because you use the asset only for 10 months. Here is an exception. Here you don't use quarters, you use months. 18.4 and 18.5. And this 2,50,000 you will have to reverse from your credit ledger. Yes, you will have to remove from your credit ledger. Check it, not very important at CA interlevel, but still try and see if you can understand this. This is section 18.4 and 18.5. 4 is forego. You have to forego your credit. Why? Because the government will not be happy, so they will not give you credit. And also, whatever credit you've already taken, you have to reverse it. It's almost like, guys, when you join articleship, will you be given a laptop from your office? Please tell me, when you join articleship, will you be given a laptop from your office? Yes. But what if in middle of the year only you leave your articleship? Will they take the laptop back? Yes, they will take your laptop back. Same way, when you bought the stock and when you bought the truck, did you take credit? Yes. But now that you're coming out of the scheme, will they take the credit back? Yes, they will take the credit back. But in case of capital goods, they will give you proportionate based on months the credit. I hope you understand it better with this simple example of articleship. Perfect. Okay. Solves my purpose, solves yours. Both happy. Good. Guys, just recapping the sections. On the next page, 18.1 was special circumstances, 4 of them. Register voluntarily, credit expires. You get in these two ITC on stock. Here you get ITC on stock as well as on the capital goods, 5% per quarter you have to minus. 18.2 says that you will get stock ITC, but the stock does not have to be too old, maximum 1 year old. 18.3 says sale, exchange, sale, amalgamate, merger. In that, the next entity will get ITC. And 18.6 is for sale of asset within the 60 months. And 18.4 and 18.5 says forego, forego, forego. You can forego. Yes, you can forego. So you've quitting your articleship midway. Will they take your laptop? Yes, and they will forego it. Yes. So this is section 18. Difficult, yes, you need constant revisions to be well versed with this. Almost reaching to the end of this chapter. So I'm just telling you 2 rules which you should know. One is rule 86A. The shortcut is avoid. Guys, you're electric by company and the officer feels that there is something wrong happening. What is wrong? Either you are taking credit, you have taken ITC, but there has been no supply, the supply is not there, or the supplier only is not there, or the invoice is not there, or the recipient is not there, or the return is not there. What is the problem, guys? Either the supplier is not there, recipient is not there, supply is not there, invoice is not there, or return is not there. One of these conditions exist. Then the GST officer can intervene and can block your credit or stop you from taking credit for a while. How much while? Maximum 1 year. And in that maximum 1 year time, he will investigate whether you are doing everything okay or you're trying to fraud the government. And this investigation, if it leads to a result, great. If it doesn't lead, after 1 year, you can take the credit. That's the maximum period. But if you feel no, you are right and the GST officer is wrong, you can appeal to the commissioner to intervene. Commissioner is the GST officer's boss. You can appeal to the joint commissioner or higher, and he will intervene and he will unblock your credit. That is 86A. Please read this. In case the officer believes ITC has been availed fraudulently, then it can be prohibited, maximum for 1 year. This period can be reduced by the commissioner. What are the reasons? There is no supplier, non-existent supplier. There is no receipt of goods. Tax is not paid to the government. The recipient is not existent. So these, you don't have to by heart it. Just remember, guys, either you are not there or the recipient is not non-existent. Supply is not there, invoice is not there, return is not there. Return is not there means tax has not been paid. So in any of these situations, can they invoke rule 86A? Yes, for maximum how much period? 1 year. Alright, that is rule 86A. And the next rule 86B, we will be able to do only when we finish the next leg, that is payments. So once we finish that, we will be able to do this. So I'm just removing all of this and looking at the last part of ITC chapter, which is every year asked in your exam. Pay attention, guys. Guys, this is Electric Bike Company and they have made a supply which is intrastate. Guys, what kind of GST has to be paid on intrastate? CGST and SGST. So let's say the supply is 10 lakhs and 9% of 90,000. So the supply creates a liability, guys. This is IGST, this is C and this is S. So you have to pay for this month CGST of 90,000 and SGST of 90,000. Is this your liability? Yes, these are your liabilities. So whenever you supply, it creates liabilities. And let's say they have to pay interstate. They have made a supply of interstate also 10 lakh. Guys, on interstate, what GST will apply? IGST. And let's say the rate is still 18% only. So this is 1,80,000. So is this your liability? Yes, this is your liability. Pay close attention to this concept. Very simple but very valuable in the exam. Guys, please tell me, have you made any supplies in this month? Have you made any supplies? Yes. And supplies create what, guys? Supplies create liabilities. SL. So can you see the liability? IGST, C and S, 1,80,000, 90 and 90. Now, are you purchasing something? Yes. And if all the conditions are satisfied of 16.1, 16.2, 16.3, 16.4, etc., can you take ITC of these purchases? Yes. So guys, purchase gives you credit. Yes, PC Priyanka Chopra, purchase gives you credit. So here is the credit, guys. I'm writing credits here. Let's say you purchase something in IGST and there is 2 lakh C and SGST. There is an opening balance of 10,000. Sorry, opening balance of 1 lakh. And this month there is a purchase on which there is a credit of 10,000 and an SGST only 10,000. So total it up, this is 2 lakhs, this is 1,10,000 and this is 10,000 credit, as these are your credits. How do you get credits? Purchase give you credit and sale gives you liabilities. Now guys, please tell me, when you get an electricity bill at home, do you, for your parents, do they have to pay the electricity bill every month? Yes. Can you not pay the bill, guys? Is there a possibility not paying the bill? No, if you don't pay your bill, they will cut your electricity, so your bills have to be paid. So here, same way guys, do you need to pay these liabilities? Yes. And can you pay your electricity bill through Paytm? Yes. But what if you don't have enough money? Can you pay some through Paytm, some through cash? Yes. Same way guys, this liability also can be paid through credit. But what if you don't have enough credit? Then you can also pay cash, but first use credit. So this is what we are going to learn now, how to pay. Guys, this is your money in your Paytm account, IGST, CGST and SGST. Think of IGST as your parent. And think of C and S as two children or two siblings who always fight and they don't talk to each other. First guys, when your bill comes home, this is your bill. First, your parents will use their money. Please tell me in this, how much is your parents' Paytm balance? 2 lakhs, perfect. And how much is your parents' electricity bill? 1,80,000. So first they will pay their bill. Do they have money to pay their bill? Yes. Their bill is paid? Yes. And how much now remains with them? 20,000. Now guys, two more bills have to be paid. C and S. The children's bill has to be paid. But the parent says, listen, don't use your money. Don't use your money. First, let me finish my money. So will you always exhaust IGST first? Yes, you will always exhaust IGST first. So how much IGST is left guys? How much IGST is left? 20. Now you will use this, but against whom? Will you help SGST or will you help CGST? Guys, that depends on who is needy. No, that depends on who is needy. Please tell me, in CGST, how much is the bill? 90,000. And how much does CGST have? Do they have enough money to pay their bill? Yes. But please tell me, how much is SGST's bill? 90. And do they have the money? No, they don't have the money. So you help the needy. Who's needy? SGST is needy. So I'm taking this 20,000 and I'm helping SGST. Done? Yes. Any other answer will be wrong. You have to do this. Yes. What if guys both were not needy? What if both were not needy? Then you can help whatever you want. 5,000 here, 15,000 here, doesn't matter. But if one is needy, guys, if you see two people, if both are full, can you give food to any of them? Doesn't matter. They will take it home only. But if one person is hungry and one person is full, will you give food to the hungry person or to the full person? To the hungry person. Same way here, if both have enough money, then you can give it to whomever you want. But if one needs money, first help him by the amount he needs. Now guys, CGST, what is the bill? 90,000. Do they have enough money? Yes, 90,000 is paid. How much remains? 20,000 remains. And is this bill paid? Yes, this bill is paid. Congratulations. And now SGST will pay its bill. 10,000 rupees is used. 10,000 is paid. So how much bill remains to be paid? 60,000. But guys, can CGST pay SGST's bill? No, they don't talk to each other. They don't talk to each other guys. So CGST cannot help SGST. So what will happen to this 20,000? This will get carried forward to the next month. And how will this have to be paid? This 60,000 will have to be paid in cash. I hope this is clear guys. This is a chapter called Payment of GST. I have told you this now only, so payment chapter will be just a formality. So this is what is payment chapter. This same question will come for 8 marks. That's the first question every time, and if you understand this, 8 marks are yours. Alright guys, here it is. I'm just showing you this from the screen. Utilization of credit. Credit ledger can be used to pay only tax. We'll see that ahead in payment chapter. cash ledger can be used to pay TIFPO. We'll see this in the next chapter, payment. But how do you use it? There is a rule called 88A and a section called 49A and 49B which tells you how to use this ITC, etc. What you just saw. That is a section called 49A, 49B and rule 88A. First, did we calculate our bill for the month, guys? Did we calculate a bill for the month separately for each type of GST? Yes. First you need to know how much is your bill. Then did you identify the opening ITC and add the credit? Yes. On what do you get the credit, guys? Purchase. Purchase gives you credit. And what do you get liability from? Supply gives you liability. Then guys, did you first use and exhaust IGST to pay your IGST fully? Yes. And then whichever is more needy, did IGST help the one which is needy? Yes. And then did you use S and G for first? Always guys, first help yourself and they'll help the others. Guys, can C and S help each other? No. But guys, can they help the parent? Here we did not have to help the parent. But guys, what if the parent have low money? Can C and S help the parents? Yes, they can help the parents, but they can't help each other. Rule 86A and now rule 86B. This is the last thing that we will do and then we will end the session, guys. Of course, we'll do some questions before we end. Guys, rule 86B is a sure shot in your exam in May. It is 100%, I can give you in writing that rule 86B will be asked either in May or maximum in November, but this year they will ask this rule. Now what is this rule 86B? This is beg. They beg you to pay some money in cash. B is for beg. Okay, let's see what this is. Everyone, eyes on the screen. This is Electric Bike Company and this month they have supplied bikes worth 60 lakh rupees interstate. Please tell me how much will be their IGST liability at 18%. Their liability, which is IGST liability, will be 10,80,000. Now, what if they have credit, guys? What if they have credit of IGST of 12 lakh rupees? Can they use the credit or Paytm money to pay the bill? Yes. So they can use 12 lakhs out of this 10,80,000 to pay the bill. But the government says, listen. If in a particular month your sale or your supply is more than 50 lakh, is this more than 50 lakh? Yes. Then please we beg of you, whatever is your liability, at least 1% you pay in cash. So what is my liability? 10,80,000. Out of that, at least 10,800 you have to pay in cash. Remaining, if you use credit, I have no problem, but at least 10,800. So guys, please tell me, rule 86B, are they begging you to pay cash? Yes. How much cash, guys? Minimum 1% cash. But when do they apply this? Only if your monthly sales are more than 50 lakh in that month. So in this case, are you supposed to pay a liability of 10,80,000? Yes. Do you have enough credit? Yes. But still, will you have to pay some amount in cash? Yes, you will have to pay some amount, at least 1%. What if I want to pay more in cash? No problem. But at least 1% you have to pay in cash. Guys, this does not apply to 4 people. We will see right now. But first, this section. Use of electronic credit ledger balance. So this credit ledger balance, how much can we use? That is what they're talking about. 50 lakh sales in a month. 50 lakh sales in a month. If you cross 50 lakh sales in a month. If sales in a month exceed 50 lakhs, then only 99% of the liability can be discharged through credit ledger. So that means 1% has to be paid through cash. However, there are exceptions, guys. There are 1, 2, 3 and 4 exceptions. 1, this rule does not apply to government. So if the government has to pay, or a public sector undertaking, local authority or statutory body, then this rule does not apply. If till this month, guys, we are in the month of February and the year started in April, from April to February, anyways you paid every month cash more than 1%, then you don't have to, this rule does not apply to you. If you've anyways every month from April, May, June onwards till this month, you've anyways paid cash of more than 1%, then this rule does not apply to you. If you've got a GST refund of more than 1 lakh, how do you get GST refund? We'll study at CA final. But if you get a GST refund of more than 1 lakh, then this rule does not apply to you. And if you got income tax refund, if you paid income tax of more than 1 lakh in both the 2 previous years, that means not this year, before this year, the 2 years, if you paid income tax, this is the first time where income tax and GST come together. These 4 situations, rule 86B does not apply. I'll repeat, what are the 4 situations? Tax refunded in cash by the government. Tax refunded in cash by the government. Government doesn't apply. If you paid in cash 1% or more till now, anyways, this does not apply. If you've got a GST refund of more than 1 lakh in the last year, then does not apply. And if you paid income tax of more than 1 lakh in each of the last 2 years, so income tax is for last 2 years, refund is for last 1 year, this rule does not apply, rule 86B. So very important, guys, this rule is there in your exam for sure. Whether it's May exam or November, one of them, it will definitely be there. So watch out for this rule well. Now guys, doing what we do best, questions from the module. I don't think we'll be able to finish all the questions from the module, but we'll still try. Here we go. This is the ITC chapter. And these are the questions. First question, guys. Condition. What are the conditions necessary for availing ITC? Please tell me the shortcut for the 4 conditions, please. What are the conditions necessary for taking ITC? There is section 16(2), which tells you DRGR. You should have a document like an invoice, credit note, etc. You should have received the goods. The government should have got the tax. You don't have to pay immediately, but the government should get the tax, and you should have filed the return. Next question, guys, please read. Very, very conceptual, good question, the next one. Guys, read it carefully. Can a person take ITC without payment of consideration for the supply? Guys, in business, do you pay immediately? Only Nikita has got the right answer. Guys, in business, do you pay immediately? No. But can you still take credit? Yes, guys. Can a person take ITC? Yes, they can take ITC even without payment. So by how many days you have to pay? You have to pay in 180 days. Guys, be watchful, guys. These are the questions that will trick you in the exam. These are the questions that you should be sure of. Next, what is the time limit? I want the section and I want the time limits, guys. Please use the chat box to tell me the section and the time limits. Guys, section is section 16(4). The time limit is either 20th October, that is the September returns due date, or the annual return filing date, whichever is later or earlier, guys. Whichever is earlier. Next, guys, 6th question, please. What is the tax implication for supply of capital goods by a registered person who had taken ITC on such capital goods? As section 18(6). Supply means sale of capital goods. If you've already taken ITC on such capital goods and are selling it, then the sale price into the GST, either that or the ITC reversed per quarter. If you remember that, whichever is higher, this is almost like a punishment. The language is slightly different. Supply of capital goods means selling the capital goods. They don't use the word sale, they use the word supply now. Next, please read and please answer. Transfers your business to another person. Is such a person allowed to transfer? Yes, by filing GST ITC 02. Next. Very, very good question. I want the section also and the answer also for the 8th question, please. Guys, here they are a manufacturer of taxable goods, so the government is happy. They purchased a machine for 8 lakh on which IGST of 14,400 is paid. The company has claimed depreciation on the full value of the machine. Guys, will they get ITC? No. Section 16(3) says that you can either take depreciation or take credit. You cannot take both. Excellent. The 9th one is an interesting one, guys. Sigma Consultants provides financial consultancy services. It made an advance payment of 1,18,000 inclusive of 18% GST in the month of October to Azuro Private Computer Services for developing a software. So guys, this is a supplier, Azuro Computer Services. They supplied to Sigma Consultants, and Sigma Consultant has already made an advance payment of 1,18,000. The software would be used by LLP to enhance the precision of the financial advice given by it to its various clients. The balance payment is to be made after the successful test of the software in the month of December. Sigma Consultants had availed ITC of 18,000 in the month of October. Guys, can you avail ITC? Yes, you can avail ITC. 18,000 ITC has been availed. This is anyways a business expenditure. Do you think Sigma Consultants can avail such ITC? Guys, can the Sigma Consultants avail such ITC? Yes. They are meeting the condition of 16(1), 16(2) also. Everything is okay? Yes, everything is okay. Perfect. Guys, what if they had not paid in advance? Will they still be able to take ITC credit? Yes, you don't have to pay, guys. You have to pay only within 180 days. Otherwise, it's okay. 10th question, guys. Over to you all. Please read the 10th question. Guys, they bought a car with 5% capacity for executive director. Can he avail ITC? Guys, is it VAM? Yes. And is it GST, please? Is it for goods? No. For selling ahead or renting it ahead? No. For training? No. Is it for passengers? Yes. It should be more than 13. Not even 13, more than 13. Is it more than 13? No. So can you get ITC on this? No. Next. 12th question, please. Guys, AB is a registered person but registered under composition scheme. Now on 31st July it's getting out of the scheme. Is the government happy, guys? Is the government happy? Yes. So will they now give you ITC? Definitely yes. This is a special situation, section 18(1)(a). On stock, on your stock, will you get ITC? Yes. But on capital goods, no. But what if next you buy any stock of capital goods, then you get. But on your stock of goods, you will get, but on a stock of capital goods, you will not get. But less than 1 year, absolutely right. Guys, question number 13 on the screen. Guys, are you coming out of the exempt supply, guys? Yes. So is the government happy? Yes. So will you get ITC from that day? Yes. This is the special situations 18(1) A, B, C, D register voluntarily credit expires 18(1)D. On the stock also, which you have on that day, plus the capital goods also minusing 5% per quarter. Question number 14, guys, over to you all. Guys, Mamta Trade Links was earlier making exempt goods and providing taxable services. Now the exemption has been withdrawn. Is the government happy, guys? Yes. Will you get credit? Yes. This is also a special circumstance 18(1)D. Register voluntary credit expires, this one. And here, from now onwards, whatever you buy, you'll get ITC. But what about the stock? You will get the credit, yes. And what about capital goods? Will you get credit? Yes, after minusing 5% per quarter. Guys, this is question number 15. Please tell me who is the supplier in this question. Start reading and tell me who is the supplier. Harshgeet Private Limited. This is the month of July. You have to find the amount of ITC that he can take. Read 1(1) and tell me, guys, which ITCs he can take. In the chat box, if he can take an ITC, tell me the number. Sorry, Abhi, that is the wrong answer. This is the month of July. Please read again, guys. Be careful when you read. Yes, please. Which ITCs can be taken? Whichever number you think can be taken, put in the chat box. Excellent, Abhi. Good answer. And anything else? Nikita, good. Gayatri, perfect. Guys, raw material to be received in the month of September. If you don't receive the goods, you cannot take GST. That is section 16(2) DRGR. Membership of a club availed for employees working in the factory. It's not a statutory requirement. You will not get. This is block 17(5). Inputs to be received in 5 lots. Only 3 have been received. You will not get 16(2) DRGR. Trucks for transport of raw material. You will definitely get this. Why? Because this is GST pleased for transportation of goods. And capital goods, out of 3 items, invoice for 2 items is missing and the GST paid on those items is 80. So 80 you will not get. 70 you will get. So 70 and 40, that is 1,10,000 for the month of July. Next, guys, this is Jamku, who is also a supplier of spices. For the month of October, this is the detail. Please read and please tell me which all ITC you will get. This is Jamku and this is the month of October. Whichever you think will get, you have to put in the chat box. Alright. Guys, you are purchasing. On purchase, do you get credit? Yes. Raw spices sold to customers, you will get credit of this? Yes. For personal use of directors, will you get of this? No. This is blocked. Personal use 15HG Ghar pe supply is blocked. Electric machinery purchase for being used in the manufacturing process, this is allowed. Motor vehicle used for transportation of the employee. Transportation of employee not allowed unless it's more than 13 passengers. Payment made to a contractor for construction of staff quarter, as this is immobile property, it is blocked under 17(5)(c). So only 50 and 25 allowed. Next guys is Dina Limited, again a registered supplier from Maharashtra for the month of March. Please read, and whichever is allowed, please tell me in the chat box. Guys, this you will not get because you've received it in April 2nd, you're going to receive in April, so you will not get 16.2 DRGR. This is build to ship to model, you will get, there is no problem with this. Purchase of bus, seating capacity 15 for transportation of employees, this you will get because it's not blocked, this is more than 13 passengers. And general insurance taken for a car for official purpose of executive, the car is not allowed, even this will not be allowed, this is 17(5)(a) or 17(5). Perfect. Going to the next question guys on the screen. I am doing this with you. There is a company called Comfortable Limited. This is the last thing that we do guys before we take a break. This is a company called Comfortable Limited. They are registered in the state of Odisha. They have engaged in the business of manufacturing some products. They have received some IT engineering services from a company called Hi-Fi, where the service is for 11 lakh excluding GST. So 11 lakh, on that 18% is 1,98,000. So 1,98,000 is the GST. 11 lakh is the main amount. Can you take credit even if you have not paid guys? Yes, you can take credit of 1,98,000. The invoice was received on 5th November, but make sure you pay within 180 days. Comfortable made part payment of 4,20,000 within some days. However, being unhappy with the service, they did not make the balance payment. After it was made the balance payment on 6th July. So guys, was 4,20,000 paid on time? Yes. Then the GST in relation to that is 4,20,000 into 18%, 75,600 you can take, no problem. But the balance you cannot take, so I'll tell you how to calculate this. So total payment you had to make was 12,98,000. Out of 12,98,000 you made a payment of 4,20,000. So in that proportion you will get GST, but the balance you paid in 6th July. 6th July means after 180 days. From November, December, Jan, Feb, March, April, May. In May 6 months gets over, so 180 days gets over. So the balance you will have to reverse. Yes, with interest, yes. But don't worry, you will have to reverse it in the month of May, but in July you will again get the credit, but interest is gone. Yes, this is rule 37. I hope you understood it. The 19th, 20th question. Only two guys. Should we finish it? Let's finish these two. The 19th question is here guys. In fact, what you can do is, this 19th question is on a build to ship to model. You can do it as a homework, build to ship to. And this 20th we will do. Like this 20th question we'll do many guys. This is Paritosh who is supplying goods. Please tell me, this is the outward supplies. On outward supplies guys, what is there? Liability on supplies. So on intrastate, what kind of liability will arise? C and S. And on interstate, what kind of liability will arise? IGST. So this will go in your liability register, ICNS. Now let's see the purchase. Guys, is this the opening balance? Yes, 57 ICNS opening balance, 1.4, 57 and 60. And guys, on purchase, what do you get? On purchase, you get credit PC. On intrastate purchase, what credit will you get? You will get CNS. And on interstate purchase, what credit you will get? You will get I. So you will get the total here. Yes. We will do many sums like this, don't worry. In the payment chapter, only sums like these are there. Guys, first, which credit will you use to pay which bill? First, you will use IGST and you will completely exhaust IGST. Only then CNS will be used to pay their own bills. But if there is any shortfall, guys, can CNS help each other? No, they can't help each other. We'll do more sums like this when we come back in the next chapter called payment. So this session was really nice. We finished the target very well. I'm just telling you what was the target in this session. I was not sure we'll finish ITC, but we finished that as well. As in today's, we did ITC, we've done registration, we've done 2 exemptions, and we've done so many sums. I'll see you guys now in half an hour in the next session, and we will do more. The next session will have chapters like return, invoice payment, and we will do lots more in the next session as well. Thank you so much. See you guys very soon. Guys, in case you're watching this, please do join the Telegram group and also the Google Drive link, and reach out to me for any questions that you have. Thank you very much.